So hello all my dearest students of South India. I hope you all are doing good. I hope your studies are going on great. So let us continue today with the discussion of the revisions for your CA final direct tax paper for May 24 and November 2024, which will be absolutely in full English. So we have already uploaded two revision videos covering two MEMAT topic like PGBP and capital gains. We have completely revised those two topics. So today we are going to revise what? Today we are going to revise filing of returns, assessment procedure, appeals, rectification, so on and so forth. Okay. Now let us start with section 139.1. First of all, in 139.1 we need to answer two questions. First is who is obligated to file the income tax return, and the second question is what is the due date of filing the income tax return. So who is obligated to file the return? There are multiple categories of people who are obligated to file the return. Let us see the first one. The first one is the company and firm are always obligated to file the return irrespective of their profits and losses. They are always supposed to file the return. Okay. Second, apart from company and firm, other persons will file the return if their gross total income is greater than the basic exemption limit. If the gross total income is greater than the basic exemption limit, then they are liable to file the return. Now, what do I mean by gross total income? Gross total income here has to be computed before taking two items. So the GTI has to be before two items. That is before chapter 6A and before the exemptions of capital gains which are covered in section 54 and 254 GB, whatever it is. Okay. So you have to see the income before these two items and then you have to check it exceeds the basic exemption limit or not. If it exceeds, then you have to file the return, or else you are not supposed to file the return. Okay. This is the first category of people who are supposed to file the return under the income tax law. The second category is an individual who is an ordinary resident and is a beneficial owner or beneficiary of any asset located outside India. So if you are an RNOR, ordinary resident, and if you have any assets located outside India, or if you have any financial interest in any entity outside India like shares in any company or partnership firm, partners, etc., etc., or if you are a signing authority in any account located outside India, then also you are supposed to file the return even if your basic exemption limit is less. Okay. Even if your total income is below basic exemption limit, you will be liable to file the income tax return in that case also. I hope it is clear to all of you. Category 3. In category 3, there are multiple people who are coming over here. If any assessee who deposited more than 1 crore rupees in one or more current accounts. So if you deposit more than 1 crore rupees in one account or aggregate of 2 account or aggregate of 3 current account in one or more account of a banking company or a cooperative bank, you are supposed to file the income tax return. Next, if you are incurring more than 2 lakh rupees for either yourself or for any other person for a foreign travel. So if you incur more than 2 lakh rupees for foreign travel for either yourself or any other person, you are supposed to file the income tax return. Next, if you incur an expenditure of more than 1 lakh rupees for electricity consumption. So if you are consuming more than 1 lakh rupees ka electricity in the entire financial year, then you are supposed to file the income tax return. The government wants to see from where the hell you are getting so much money to pay so much electricity fee, so much electricity charges. Okay. Last category is as follows. There are multiple people over here also. If you are doing a business and if your sales is greater than 60 lakh rupees, you are supposed to file the return irrespective of your total income, total loss, whatever it is. Okay. If you are doing a profession and if your gross receipt is greater than 10 lakh rupees, you are supposed to file the return irrespective of your total income, total loss, it doesn't matter. If you are a resident and if you are a senior citizen, resident plus senior citizen 60 years or more, and if your TDS and TCS is greater than equal to, now it is greater than equal. In the first two category, it was greater than. In the third category, it is greater than equal to 50,000 rupees. Then you are supposed to file the income tax return. Okay. So if you are a resident and if you are a senior citizen and there is a TDS and TCS deducted and collected in your case of 50,000 or more, you are supposed to file the return. And other cases, the TDS and TCS has to be 25,000 rupees or more. Other case means what? Who are non-senior citizens, who are non-residents, for them it is 25,000 rupees. If you are a person who is having a saving bank account, who is having a saving bank account, and in the saving bank account, you are depositing in the entire financial year in one or more saving account 50 lakh rupees or more, you are supposed to file the income tax return. Okay. So these are few category of people to whom filing of income tax return is mandatory as per the income tax law. Now let us talk about some exemption from filing of ROI. Some people are exempted from filing ROI. Who are those lucky people? Who are those fortunate people? Let me tell you. If you are a non-resident or foreign company and if you have made an investments in AIF, AIF stands for Alternative Investment Fund. So if a non-resident or foreign company is making an investment in AIF, that is Alternative Investment Fund, which is located in IFSC, and the AIF has deducted your TDS and has paid your TDS, and you, that is the non-resident, does not have any other income. Non-resident only has income from AIF and TDS is also deducted. And where is the AIF located? AIF is located in IFSC. In that case, the non-resident in foreign company is not liable to file the income tax return under section 139 subsection 1. But if the department wants, department can send you the notice under 141 or 148 and force you to file the income tax return under these two sections, but you yourself are not liable to file the return under 139. But the department wants, the department can force you to file the return under 142(1) or under 148. I hope it is clear to all of you. Next one, what is the due date of filing of return, sir? There are three due dates. October, for few people it is November, and for few people it is July. First of all, let me clear for whom it is November. An assessee who is covered by transfer pricing, if transfer pricing is applicable in your case, then you will file in November. Now let us talk about October because that is the most important date. The company will always file in October. Always October. Other persons will also file in October if they are liable for audit under any law, not only tax audit. If they are liable for audit under trust law or if they are liable for audit under LLP law, then also they are liable to file the return in the month of October only. And the third case, if the firm is getting audited, then the firm will file the return in October. Therefore, in case of such partners will also file return in what? In October only. So if the firm is filing in October, then the partners will also file in October. Similarly, if the firm is following transfer pricing, then the partners will also follow the 30th November due date. So because the firm is filing the return because of transfer pricing in November, so partner will also file in November. Okay. Rest of the cases will fall in July. Okay. Now one last thing, which is a special case of Portuguese Civil Code, which I have told you in the class also, which is applicable to certain states and union territories, which is applicable to Goa, Diu and Daman, Dadra and Nagar Haveli. It is applicable to these states and union territories. What is the law? The law of these union territory and these states are, whatever income is earned by husband except salary income, it will be divided 50-50 between husband and wife. And whatever income is earned by wife also, that will also be divided 50-50 between husband and wife except the salary income. So for example, I am a husband and I stay in Goa and Portuguese Civil Code is applicable on me. So if I am a partner of a firm, listen carefully, and if that firm is filing in October, so I will also file in October, but whatever is my remuneration and interest, 50% will belong to my wife also, right? Because of the Portuguese Civil Code. So in that case, my spouse will also file in what? Will also file in October. This is what this provision wants to tell us. I hope it is clear to all of you. Sir, what are the consequences of not filing the return on time? There are many consequences of not filing the return on time. Some of them are listed below. We are going to talk about all of them one by one. I am not speaking about them as of now, but I will speaking about them one by one in the later part of this particular revision video. The first one I am speaking right now only. If you do not file the return on time, you will not be able to claim any profit link deductions. To claim profit link deduction, you have to file the return on time. Without filing the return on time, profit link deductions will not be allowed. Can I claim the payment link deduction, sir? Yes, payment link deductions are allowed. There is no harm in claiming payment link deduction by filing a late return. But claiming a profit link deduction is not allowed if you file a late return. Second consequence, if you file a late return, there can be a fee which can be imposed on you, which is 5,000 rupees. But if you are a small assessee and if your total income is up to 5 lakh rupees, then the fee will be only how much? It will be only 1,000 rupees. I hope it is clear to all of you. Now, there are certain special assessees for whom there are certain special sections made by the government of India. They will always file the return in October because these special assessees are liable for audit. Because they are liable for audit, they will file the return in October only. The first one, 139(4)(a), charitable and religious trust. They will file the return in October, and when they will file, if their total income before giving the exemption is greater than basic exemption limit. So before giving the exemption, you have to check the income. If it is greater than the basic exemption limit of 2.5 lakh and 3 lakh, whatever is the basic exemption limit in today's time, if it is greater than that, they have to file the return. Okay, don't check the income after exemption. Check the income before giving the exemption. What is the income? If it is greater than basic exemption limit, they are supposed to file the return, and these people are supposed to pay 234F fee also. And along with that, if they don't file the return on time, they are liable for a penalty under 270A of rupees 500 per day, which will start after the due date of filing of return. That is from 1st of November. 500 rupees per day penalty will also be imposed along with 5,000 and 1,000 rupees fee, which is applicable for not filing the return. Okay. Next, political party 139(4)(b). For political party also you have to check the income before giving the exemption. It is greater than basic exemption limit, then they are liable to file the return. They are only liable to pay fee under 234F, no penalty under 272A. Then 139(4)(c), certain institutions whose income is exempt under section 10. Again, you have to check the income before giving the exemption under section 10. If it is greater than basic exemption limit, they are liable to file the return. Here also, just like the trust, 500 rupees per day penalty will also be imposed along with 234F fee. Next, 199 4D, 35 1 2, 35 1T, university, one university, college, institution. Who are these people, sir? These are Scientific Research Association, Statistical Research Association, Social Science Associations. For them, it is always mandatory to file the return. There is no basic exemption limit for them. And 234 fee will be imposed. Okay, no penalty. And for business trust and investment fund also, these are two important topics in your CA fund syllabus. For them also, it is always liable to file the return. There is no basic exemption limit for them also. And for them also, if they don't file the return, 234 fee will be imposed on them. Okay. Now coming to the next section, 139.3, read with section 80, that is loss return. The law says that if there is a PGBP loss, or if there is a CG loss, capital gains loss, which is covered under these sections 72, 73, 73A, 74, 74A, and if you want to carry forward these loss, what you want to do? Carry forward to the next year and set off. Then you have to file the return on time. If you want to set off in the current year, then there is no restriction. If you want to set off in the current year, then there is no restriction. You can file the return late also and set off it. But if you want to carry forward to subsequent year and set off against the income, you want to take it to the next year, then you have to file the return on time. This restriction is only for carrying forward the loss. It is not for setting off in the current year. This restriction is not also for the previous year losses. It is only for the current year losses if the current year return is not filed on time. Okay, I hope it is clear to all of you. Further, this restriction is only on PGBP and CG loss. This restriction is not on HP loss. This restriction is not on unabsorbed depreciation also. In these two cases, you can file the return late and you can carry forward the loss and set off it. Okay, no issues in that. Now, sir, because of some genuine reason, I was not able to file the return on time, and because of which the loss is getting lapsed. Sir, is there any way I can get a condonation? So, one more case, sir. There is a loss case, and there are also some refunds which I am supposed to take from the income tax department. I was not able to file the return on time and claim the refund. Is there any way I can get some condonation? Yes, if there is a loss or if there is a refund, and if you have not been able to file the return on time, you can make an application to respective authority. Who are those authority? If the claim is up to 50 lakhs, you can make an application to CIT or principal CIT. If the claim is more than 50 lakhs and up to 2 crore, you can make an application to chief CIT. If the claim is greater than 2 crore and up to 3 crore, you can make an application to principal chief CIT. This is an amendment which is made on 31st of May 2023. So this limits can be important. Earlier the limits were different. Okay. And if it exceeds 3 crore, then you have to make an application directly to CBDT. For how many years I can make application? You can make application till 6 years from the end of the relevant ABI. Whatever is the relevant ABI, you can make application for within 6 years from the end of that relevant ABI. Okay. Then you will make an application to CIT, principal CIT. They will forward your application to AO, and AO will make necessary inquiry. And in case of refund, they will give you the refund also. In case of loss, they will give you the loss to be carried forward also. And in case of refund, please, don't ask for what? Don't ask for interest in case of refund. You are not going to get any kind of interest on what? On the refund amount. Okay. I hope it is clear to all of you. Next one, belated return 139.4. If I do not file the return on time, I have a time to file the return belated also by 31st of December of the relevant AY or before completion of assessment, whichever is earlier. Now, sir, this is which assessment which is getting completed even without filing a return? Only one assessment under income tax law can complete without filing the return, and that is the best judgment assessment under 144. So, the last date is 31st. The assessment is completed on 15th November, then the return has to be filed before that. If it is filed after 15th November, it is void ab initio, it is of no use. Okay. Sir, what do I mean by completion of assessment? When can I say that the assessment is completed? You can say on the date of passing the order. Whichever day the AO has passed the order, signed the order, that day can be called as date of passing the order, date of completion of assessment, and not the date on which the order is received by you. The day on which the order is received by you is called as the date of service. The date on which the order is passed by the officer is known as the date of completion. Okay. I hope it is clear to all of you. Now, next section 139.5. Sir, if there is a return in which there is some mistake, some omission, some error, can I rectify that? Yes, you have a time to revise the return. Which return I can revise? You can revise the original return. You can revise the belated return. Both the returns can be revised. If there is some omission, some wrong statement, you can revise it. What is the time limit? The time limit is same as what? Same as the belated return. 31st December or before completion of assessment, whichever is earlier. Sir, how many times I can revise? You can revise n number of times. There is no restriction on number of times the return can be revised, but you have to revise before the due date mentioned in 139.5. Sir, can I revise the return after getting the scrutiny notice? Yes, getting a scrutiny notice does not amount to what? Completion of assessment. You can revise the return even after getting what? Getting the scrutiny notice. Okay. Therefore, this is what this point is important. An assessee cannot revise the particulars in the original file by filing a revised statement. He has to file a revised return. So if he wants to revise anything, he cannot give a statement to the department, and he cannot give a plain letter to the department and tell that I want to revise. He can only revise by filing a revised return. It was held by the court in the case of Orissa Rural Development Housing Corporation Limited. I hope it is clear to all of you. In short, the law wants to tell you, if you want to revise, you have to file the return revise. You cannot give a plain statement to the department to file a revised return. Okay. Next one, defective return. What is a defective return? A return is filed by you, but the AO finds the defect. The AO considers the return to be defected. Then he will intimate the assessee to rectify the defect. Okay. And he will give an opportunity to rectify the defect within 15 days. You can also ask for an extension by making an application. And if you do not reply within 15 days or within the extended period, the return will be considered to be what? Void ab initio. So these are some of the provisions which are related to filing of returns. I hope it is clear to all of you. So now let us go ahead with the next part, and that is assessment procedure. We are going to talk about a lot of powers of the income tax department, that is the officers, and also about different assessments covered under the income tax law. The first power which is covered under section 142(1). In 142(1) there are two clauses, subclause 1 and subclause 2, and in these two clauses the department can send you notices for various purposes. Let me talk about the first one, 142 subsection 1 clause 1. Why they are sending you notice? They are sending you notice for filing the return of income. If you have not filed the return on time, then the AO or the prescribed income tax authority may send you a notice. AO will also send you, or a prescribed income tax authority may also send you a notice, and then accordingly you have to file the return within the time mentioned in the notice. In how many days I am supposed to file the return, that will be mentioned in the notice. Sir, is this notice necessary to make a best judgment? No. I am not saying this notice is necessary to make a best judgment assessment, but this notice may be sent to any person who has not filed the return. It is just a reminder by the income tax department that your due date has gone and you have not filed the return, so please file the return on time. Okay, so they will give you say 15-20 days time to file the return, and if you don't file the return within 15-20 days, then there can be a best judgment assessment against you, or there can be search and seizure also against you, which we are going to see later on. Don't worry about it. Okay. Now, who is the prescribed income tax authority? It is prescribed under Rule 12F. It is an income tax authority not below the rank of ITO. It has to be at least ITO, not below the rank of ITO, who is authorized by CBDT to issue notice. Okay. I hope it is clear to all of you. So, the first section objective was to send you notice so that you get a reminder to file the income tax return. Okay. And you have to file the return within the time mentioned in the notice. There is nothing mentioned in the law that in how many days the return has to be filed. Okay. The notice will tell you in how many days the return has to be filed. The second section, 142 subsection 1 clause 2. It is a section of preliminary inquiry. In this section, the AO will send you a notice to ask you for certain information. He may ask you for your books of accounts, for your documents, for your other information, for your statement of assets and liabilities. Okay. He will ask you for all these things, and he will ask you maximum for how many years? Maximum 3 years data he can ask you. He cannot ask you data beyond 3 years as per this section. Okay. Now, with the help of this notice, he cannot make assessment. If he wants to make assessment under 3 different sections, that is regular assessment, best judgment assessment, and income escaping assessment, he has to send these notices which are mentioned on the right hand side. For regular assessment, he has to send a scrutiny notice. For best judgment assessment, he need to send a show cause notice under 144. And for income escaping assessment, he need to send a notice under 148. 142(1) is not necessary to start an assessment. To start an assessment, these notices are important. Okay. Now let's go ahead with the next power of the income tax department. That is precisely of the assessing officer. That is the power of special audit, which is given under section 142 subsection 2A. What is the power which is given to the AO? Now AO, while the assessment is going on, pendency of assessment is mandatory to invoke this power. There has to be a pendency of proceeding, because the law says at any stage of proceedings before the AO, there has to be a pendency of proceeding before the AO, and AO is of the opinion that the books of accounts are very complex. The books of accounts of the assessee is very complex. It is voluminous. He doubts about the correctness. There is multiplicity of transaction. The books has a very specialized nature of business, and he feels that it is in the interest of interest of the revenue to get the accounts audited. So AO, during the pendency of the proceeding, is of certain opinion that these things are happening. Then he may direct the assessee with an approval. After taking an approval from higher authority, from the commissioner, he may direct the assessee to get the accounts audited, and he will give an opportunity of being heard to the assessee before giving a direction. Okay. So before giving a direction for special audit, he will also give an opportunity of being heard to you. Okay. Now, There is a very important amendment made by Finance Act 2023. Now this section can also be used to give a direction to the assessee to get the inventory value through a cost accountant. Earlier, we used to give a direction to do books of accounts audit. Now we can also give a direction for conduct of what? Inventory valuation through a cost audit. Okay, cost auditor through a cost accountant. Okay, I hope it is clear to all of you, and he will also give you an opportunity of being heard. Now there are a few points which we need to keep it in mind. The first one, pendency of proceeding is sine qua non. This power can be invoked only during pendency. Pendency sine qua non means absolutely necessary. Sine qua non is a legal phrase. It's a Latin phrase which means absolutely necessary. Now, before giving a direction, am I supposed to give a opportunity of being heard to the assessee? Absolutely necessary to give an opportunity of being heard. Sir, what if I don't give? I am an officer. I don't give an opportunity of being heard to the assessee. Then what is the remedy available to the assessee? The remedy available to the assessee is he need to go to the High Court and file a writ petition, and the High Court may quash such directions. High Court may quash the directions given by the assessing officer. But there is no remedy under the income tax law. The assessee has to go to the High Court and apply for the writ petition, which is the fundamental right of every assessee in this country. Okay. Now, the direction which is given by the AO to the assessee, and the assessee agrees that yes, the books of accounts are complex, etc., etc., etc. Then, who will nominate the chartered accountant or cost accountant? The nomination of chartered accountant and cost accountant will be done by the chief commissioner and commissioner. The audit will be done by chartered accountant. The valuation of inventory will be done by the cost accountant, and the expenses of audit and inventory valuation will be borne by the central government only. Assessee is not going to bear the expenses. It is going to be borne by the central government only. Be very careful. Okay. Now, what is the time limit for getting the books of accounts, audit and inventory valuation done? The time limit will be written in the direction. The AO will write in the direction the time limit, and it can be extended by the AO suo motu also, and you can also give an application. AO can suo motu extend, or you can give an application for extension, but the original time and the extended period cannot be more than 180 days from the date of receipt of the direction. Maximum including the extension period has to be 180 days. Okay. Last but not least, now suppose the audit is completed and the inventory valuation is done. Now, after the audit is completed, inventory valuation is done. Now the AO has the audit report and the inventory report. Now he wants to use that in completing the assessment. Is he supposed to again give an opportunity of being heard? Yes, in case of regular assessment, he is supposed to again give an opportunity of being heard before using that material to complete the assessment. But in case of best judgment assessment, he need not give the opportunity of being heard to the assessee. I hope it is clear to all of you. The next section, the next power, 142A, valuation of asset by the valuation officer. The AO is doing your assessment or reassessment. Now the AO is not understanding the valuation of certain assets, certain property and certain investments. So he can make a reference to the valuation officer. Okay. He can make a reference to the valuation officer who are registered valuation officer, and that valuation officer will do the value of your asset, property, investments. Now earlier what used to happen? Earlier the department used to say, the law used to say that the AO can refer to valuation officer only if the books of accounts are hopeless, only if the books of accounts are rejected by the assessing officer. But later on the government made an amendment in Finance Act 2014 which says that the AO may refer to the valuation officer whether or not he is satisfied about the completeness or correctness of the books of accounts. If the books of accounts are incomplete or incorrect, then also he can make an application for, he can make a reference to valuation officer, and if the books of accounts are complete and correct, then also he can make a reference to valuation officer. Moral of the story, completeness or correctness of books of accounts is not the criteria to go to valuation officer. AO is free to go to valuation officer the moment he feels that the valuation is not proper. After the matter has gone to valuation officer, what will the valuation officer do? First of all, valuation officer will take into account all the evidence which the assessee may have given to him. He will also consider other evidence which he has considered, and he will give an opportunity of being heard to the assessee. So first thing he will do is, he will ask the assessee to give the evidence with respect to the valuation. If the assessee is not cooperating, then the valuation officer will do the assessment or will do the calculation to the best of his judgment, and he will complete his valuation. And then he will submit the report to AO as well as the assessee within 6 months from the end of the month in which the reference was made by the AO. In how much time the report will be given, that I have told you just now. And after that, on receipt of the report, the AO will do what? Assessment based on what? Based on such report, and AO will give opportunity of being heard to the assessee before using the report for the completion of assessment. Now, these three powers which I have told you, 142.1, 142.2a and 142a, all of them will be now faceless as per section 142b. I hope it is clear to all of you. Okay, let's go ahead with the next point. which is again a very important section, scheme of processing of return. All the returns which are filed under income tax law, which are either filed under 139 or which are either filed forcefully under 142(1) will go to the department that is in Bengaluru. And in Bengaluru, the return will be processed. Your total income will be determined. Your total loss will be determined after making some standard adjustments. Which are those standard adjustments? The returns are processed through a software, and the software will pick up such mistakes, some mistakes, and that will increase your income or it will reduce your income. It will lead to payable, refundable or nothing, whatever it is. Okay. Therefore, the software will pick up certain mistakes. What is the first mistake that the software will pick up? The software will pick up the first mistake, that is arithmetical error. Arithmetical error is there. The software will add or reduce whatever is the impact on your total income. Okay. Next, the second one includes 3 points. An incorrect claim, if such incorrect claim is apparent from information in the return. Now this point includes 3 points. What are the 3 points which are included in this point? First one, a claim on the basis of an entry in the return is consistent with the another entry in the same return. Now what do I mean by this? The first point means, I'll give you one example. Suppose there is page number 2 on which the depreciation is computed as 24 lakhs, and after 10 pages there is a depreciation schedule in which the depreciation is showing as 20 lakhs. So there is a mismatch. One item in the return is inconsistent with the another item. Whatever depreciation you have claimed as PGBP expense, that should match with your schedule. That should match with your block of asset. If it is not matching, then an item is inconsistent with another item and the software will pick up and add back that. Okay. Second point is, information required to substantiate entry has not been furnished. There is some information which is required to substantiate your claim. You have taken a deduction of ATG, that is donation under ATG. And for that, we need some information. That is, the PAN of the donee is required, but that is missing in the return. And therefore, the software will say that the information required to substantiate an entry has not been furnished, and therefore, your donation will be added back by the software. Okay. And the third one is very simple. Your deduction exceeds the statutory limits which are mentioned under the law. Your deduction exceeds the limit of ATC 1,50,000. Your deduction exceeds the limit of 30% house property deduction or any other deduction where there is a limit which is prescribed by the government in monetary term or percentage or fraction or ratio, whatever it is. Okay. So software will add back that particular thing. Now the next point is point number 3. So point number 2 has 3 points in it, and point number 3, 4, 5 is separately. So in all, if you count 1, 2, 3, 4, 5, 6, 7. So I'll talk about this point number 3 now. What is point number 3? Last year you have filed the return late and there was a loss. Can you carry forward that loss in the current year and set off that loss against the current year's income? No, you cannot, because carry forward of loss, especially in case of PGBP and CG, is not allowed if you have filed a belated return. So last year you have filed a belated return, still you have carry forward that loss in the current year. The software knows that. The software will add back that particular loss and it will disallow that and it will send you an intimation. Next point is in the tax audit report. In the tax audit report, it is mentioned that certain expenses are personal expenses. But while filing the return, you have claimed those personal expenses. But in the report, it is reported that 10 lakh rupees is personal expense. But in the ITR, you have claimed it. So the software will merge both of them, will compare both of them, and the software will add back that 10 lakh rupees. That is what this point has to say, point number 5. And last but not least, you have claimed a profit link deduction by filing a late return. I have told you earlier only today that you cannot claim profit link deduction by filing a late return. If you do so, then the software will what? The software will add back that. Sir, the software will directly add back and will send a final demand notice. No. The department will give you 30 days time to reply. If you reply in 30 days and give your genuine reason, then they will not add back. But if you don't reply in 30 days, they will make a final intimation and they will raise a demand notice on you. Okay. Now, sir, what is the time limit to send an intimation? The time limit to send an intimation, the time limit to send an intimation is within 9 months from the end of the financial year in which the return is filed. And is intimation is going to be sent in all the cases? No. Intimation is not going to be sent in all the cases. Intimation will only be sent in those cases where there is an adjustment and there is a demand payable, or where there is an adjustment and there is a refund, and where there is an adjustment and there is an increase or decrease in loss. In short, the intimation will mandatorily be sent by the government only if there is an adjustment. If there is no adjustments, intimation will not be sent to you. In that case, sir, what will happen? Whatever return you have filed, at that time you have got an acknowledgement. That acknowledgement of return will be considered to be what? Your deemed intimation. Okay? You can consider that to be your deemed intimation. Sir, If I am not satisfied with the intimation, what is the remedies available to me? There are two remedies which are available to you. You can go for an appeal to CIT appeal or Joint Commission appeal. You can also go for a rectification under section 154, but revision under 264 is not possible, not possible and not possible. 264 revision is not possible against what? Against a intimation. So against an intimation you can appeal or you can go for rectification. I hope it is clear to all of you. Sir, can an assessee revise a return after receiving intimation? Yes, definitely, because revised return can be filed before 31st December or before completion of assessment, and this is not an assessment. Don't be under a wrong impression that this assessment is going on. Please, 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 assessment is not going on. 143 subsection 1 is merely a processing of return. It is not assessment. Therefore, you can revise the return even after receiving what? The intimation, subject to the time limit mentioned in 139(5). Okay. Now let us talk about the scrutiny notice. Okay. Scrutiny notice we will talk about, and then we'll talk about the scrutiny assessment. To do a scrutiny assessment under 143 subsection 3, which is also called a regular assessment or a scrutiny assessment, whatever you want to say, you need to serve a scrutiny notice to the assessee. You need to serve a scrutiny notice. Then scrutiny notice will be served to those people who has either filed return under 139 or who has either filed return under 142(1). So if you have filed a return under 139 or under 142(1), the AO or the prescribed authority is Assistant Commissioner, Deputy Commissioner, National East Assessment Center. These are the prescribed authority. They will serve your notice. Serving a notice means you should receive a notice within how much time? Within 3 months from the end of the financial year in which the ROI is furnished. Suppose for previous year 23-24, you have filed the ROI on 15th of July 2024. For previous year 23-24, you have filed on 15th of July 2024. So by when the intimation should reach you? It should reach within 3 months from the end of the financial year in which the return was furnished. When is the return furnished? Return is furnished in 24-25. Return is furnished in 24-25. So from the end of 24-25, 3 months time is there. That is, you should serve the notice to the assessee till 30th June 2025. I hope it is clear to all of you. Till 30th June 2025, the notice should reach to assessee's place. Serving means assessee should receive it. Okay. Now there are some kind of mischief which was done by the assessee. For that, the government has brought section 292BB. There used to be cases when the assessee used to get a late notice. Say assessee got the notice in July. Say assessee got the notice in August. And the assessee assessment was started. Assessee was also cooperating and assessee was doing a mischief. What mischief? Once the assessment is completed, after that he is seeing. If the assessment is in his favor, then he is not saying anything. If the assessment is against him, he is saying that the notice was not served on time. Similarly, there was one more mischievous assessee who got the notice on time. No issues in the time limit. He got the notice before June. Okay. But it was in an improper manner. So it was in an improper manner. Again, the assessee cooperated. After the assessment is completed, at that time, the assessee is thinking of raising a question that whether it is valid or invalid. So the law says that if there is a notice which is late or if there is a notice which is improper, and if you raise the question after the assessment is completed, then it is deemed to be valid notice. If you want to raise the question before the assessment is completed. You cannot raise the question on the validity of the notice. You cannot raise the question on the time limit of the notice or properness of the notice after completion of the assessment. If you want to do it before completion of the assessment. This is what the law wants to say. But the Lakshman Das Khandelwal case law gives a very, very important issue. There were some cases in which the assessing officer was not issuing the notice and directly completing the assessment. In that case, the department cannot take the benefit of 292BB. 292BB is applicable only if the notice is either late issued or it is issued in improper. Without sending a notice, the department cannot defend itself under section 292BB. This is what the Lakshman Das Khandelwal case law has to say. The case law is very clear that if the department wants to defend itself, they have to send the notice. Then it is whether it is late or whether it is improper, it doesn't matter. If the assessee cooperates and if he raises the question after completion of the assessment, then we will deem that notice to be valid. But the department has to send the notice. Without sending the notice, the department cannot defend itself. Okay, I hope it is clear to all of you. Next, now we will talk about the regular assessment, which is also called as a scrutiny assessment, which is covered under 143 subsection 3. There is an AO, and now AO, after taking into account all relevant material, he will take all the relevant material. Sir, what is the relevant material? The relevant material will come from assessee in the form of ROI. He will also gather some documents, information, invoices, proofs, etc. under 143(2) by sending the scrutiny notice. Further, the relevant material may also come from third party like special audit report, right, valuation report, summons, survey, SFT can also be a relevant report, AIS can also be a relevant report these days. Okay, so all these reports the AO will consider and AO will pass an order and will determine total income and will determine tax payable and refundable for the assessee. Is it clear? I hope it is clear. Now, some very important issues which I would like to address. Then I will again come back to the previous page. Now, there is an assessee who is going to the AO and saying that, sir, I forgot to claim one deduction. Please give me this deduction now, please, by giving a plain letter. So, assessee is giving what? Assessee is giving a plain letter to the AO, and whether with the help of a plain letter, the AO is going to give you the deduction. The answer is no. It was held by Supreme Court in the case of Goetz India Limited that just by giving a plain letter, the AO is not going to entertain your claim. If you want to make any additional claim, if you want to make any claim, fresh claim, you have to file a revised return. File a revised return and then only a fresh claim can be accepted. Without filing a revised return, a fresh claim cannot be accepted by the department. Okay. Now, there are some important provisos which I would like to address you all. The first proviso and the third proviso are similar to each other, and the second proviso is slightly different. Okay, what is the similarity in the first and the third proviso? There are certain people whose income is exempt under 1021, 1022B, 1023A, 1023B, and there are certain scientific and research associations whose income is exempt under 3512, 3513 who are approved under those sections. Now, their exemption is subject to certain conditions mentioned by the central government in a notification. Okay, suppose I am that assessee whose income is exempt under these sections. Now, my exemption is subject to a central government notification. So, who will check whether the conditions are fulfilled by me or not? The assessing officer. The assessing officer during the assessment is checking the conditions. Now, while checking the conditions, he found some violation of condition. So, what is the duty of the assessing officer? Listen carefully. The AO cannot disallow the exemption suo moto. He has to intimate to the central government. He has to intimate to the central government, and then the central government will withdraw the approval. The central government will withdraw the approval, will rescind the notification, and only then the AO can disallow the exemption in the first proviso and also in the third proviso. In the first proviso and in the third proviso, the AO will intimate the respective authority, and the respective authority will take the action, will intimate the AO, and then AO will disallow the exemption under the income tax law. Okay, what is the second proviso? Second proviso is for charitable trusts which are covered under 12AB or which are covered under 1023C. And if they commit any specified violation, which we will do in the chapter of charitable trust, specified violation has around 6 to 7 different kind of violation. Then the AO will send a reference to the commissioner now. Now the AO will not tell the central government. In the first and the third case, the AO will intimate the central government. But in the second case, the AO will intimate the income tax department higher authority, that is principal CIT and principal CIT and CIT. And then those CIT and principal CIT will withdraw the registration, and then the AO will pass an order. What? By disallowing the exemption under 1023C or the registration under 12AB. I hope it is clear to all of you. Okay. Now this is what your first assessment was all about. Now let's move on to the second assessment, that is best judgment assessment. Now best judgment assessment can be done because of 5 reasons. Okay. So first of all, let's see the 5 reasons because of which the best judgment assessment can be done. If you don't file the return on time, a best judgment assessment can be done. If you don't comply with 142 notice, a best judgment assessment can be done. If you don't comply with special audit direction, a best judgment assessment can be done. If you don't comply with scrutiny notice, a best judgment assessment can be done. And last, which we have done in PGPP, if you do not regularly follow the books of accounts, either mercantile or cash, or if you do not follow ICDS. Remember, in PGPP, I have told you in the first lecture, if you do not regularly follow mercantile or cash, or if you do not follow ICDS properly, then the AO will do what? The AO will do your best judgment assessment. Now, out of these 5 cases, in 3 cases, he will send you a show cause notice. That is, in case you don't file the ROI, he will send you a show cause notice. In case you don't comply with special audit, he will send you a show cause notice. In case you don't comply with your scrutiny notice compliances, he will send you a show cause notice. But he is not going to send you show cause notice in case you don't comply with 142.1 or in case you don't comply with what? 145.3. He will not send you the show cause notice. Okay. In these 3 cases, he will send you, and the 2 cases he will not send you as it is mentioned in the book. Okay. Now, after taking into account all relevant material, the AO will make the best judgment assessment and will determine the tax payable. Sir, will refund come under this section? I am really sorry for that. A refund cannot come under 144. 144 cannot give you what? Refund under the income tax law. Refund is allowed under 143.1. Refund is allowed under 143 subsection 3 also. But under 144, refund is not possible. Refund will not be given to you under 144. Please be very careful. Sir, how is the assessment done under this section? Is it done on an ad hoc basis? No. It is not done on an ad hoc basis. It is done on a scientific basis. The AO will ask the assessee for the ITRs. If ITR is not available, the AO will compare the income with the previous year. The AO will compare the income with the industry average growth, etc., etc. AO will compare with the nature of business. There are a lot of factors that the AO has to say. The AO's order has to be a speaking order. It cannot be an ad hoc order. It has to be a scientific order. Okay. AO must specify the basis of computation of income under 144. Okay. One last thing in this chapter, then we'll move ahead with the next chapter. 144A, that is the power of joint commissioner. So what is the power of joint commissioner? Suppose there is an assessing officer who is either AC, DC or ITO. Who is the assessing officer? AC, DC and ITO. And these people are doing assessment of the assessee, and the assessment is pending. Be very careful. The assessment is what? The assessment is pending. And these three people are what? These three people are the assessing officer. Now, there is a JC who is always observing these people. Okay. Now, if the AO has some problem with assessment, the AO can go to JC for the help. Or if the assessee has some problem, the assessee can go to JC for the help. Or if the JC himself feels that the assessment is not done properly, JC himself can also come into the picture. Okay. So the proceeding can initiate from any of the three sides. From AO's side, from assessee's side, or from the JC's side. Okay. From whichever sides the JC will come, the JC will give his direction, and JC will give the direction, and whatever JC gives the direction, it is binding on the assessing officer. The assessing officer has to follow that. On assessee, it is not binding. Later on, after the assessment is completed, the assessee can go and file an appeal to JC appeal, and assessee can take the advantage of the appeal. It is not binding on assessees. JC's direction is not binding on assessee. JC's direction is binding on the AO. Whatever JC will say, AO has to pass in his order, and after the order is passed, assessee is free to go and appeal. So this is what this beautiful chapter of assessment procedure is all about. So let's go ahead with the next topic, and that is income tax authority and their powers, which we need to see one by one over here. First of all, the income tax department is defined under section 116. The hierarchy is given under section 116. The very top authority is CBDT. Then below that comes the Chief Commissioner of Income Tax, Principal Chief Commissioner, then Commissioner, Principal Commissioner, and along with that there is a CIT appeal also, and now there is also one more authority, and that is JC appeal, which is introduced by Finance Act 2023. Okay. Now all these officers which are there inside the box, one is Joint Commissioner, second is Assistant Commissioner, Deputy Commissioner, third one is Income Tax Officer. All of them are different rank assessing officer. All of these are what? Assessing officers, that you have to keep it in mind. Okay. Now let's talk about the powers of all of them one by one. The very first power that we are going to see today in this chapter is the power to issue summon, which is given under section 131 subsection 1. The power to issue summons. Summon is generally given by court, but even Income Tax Department has been given the power to issue summons in certain circumstances. Jaise, like the Income Tax Authority, including the Joint Commissioner Appeal, which is the new authority introduced by Finance Act 2023, they may issue summon. Issue summon for four matters. Matter number one, for some discovery and inspection. If they want to discover something, if they want to inspect something, they can issue summon. Okay. Second, if they want to enforce attendance of any person. Okay. If they want any witness to come to their place and give some kind of witness, so they can send someone to that particular person to enforce attendance. Third, if they want to compel you to produce your books of accounts and documents, etc. Okay, so if they want some documents and books of accounts, etc. to be presented in front of the department, they can send you a summon. Fourth one, issuing commission. They can also issue you commission. What is issuing commission? It's a technical term which is used in Indian Penal Code. Let me explain you with the help of an example, which I have explained you in the class also, but again I am saying in the revision video, because our revision videos are not just reading of the provision, it is comprehensive explanation of the entire provision in a very short span of time. Okay, so issuing commission means what? Anyways, you are not going to get the revision video in full English of the entire syllabus on YouTube for CA and direct tax 100%. You're not going to get, first of all, nobody in this entire country is going to record full English 100% video. We are the first in India to record it, and that too we are recording with lot of comprehensiveness. We are not missing out on any point that might be relevant for exams. Okay, so issuing commission means what? Issuing commission means, suppose there is a Bombay High Court and the Bombay High Court wants to issue summon to a person located in Delhi. Okay, now Bombay High Court does not have a jurisdiction on Delhi person, so for that purpose Bombay High Court has to request to Delhi High Court, and then Delhi High Court will send a summon to what? A person who is located in Delhi, and that way you can bring that person to Mumbai. This entire process is known as, where Bombay High Court send a notice to what? To Delhi High Court, request to Delhi High Court. That process is called as issuing commission. Okay. Now this power of issuing summon, point number 1, 2, 3, 4. This is also there with board for advance ruling, which we are going to do later on in direct tax, and it is also there for the black money law. Even in the black money law, the black money authorities have these power to issue what? Summon. Generally, these powers are vested with what? Civil courts. These powers can be exercised even if there are no proceedings what? Pending in front of the Income Tax Department. There is no need for pendency of any proceeding in front of the Income Tax Department. Even without pendency of the income tax proceedings, this summon can be issued by the Income Tax Department. Last but not least, if the Income Tax Department wants to send this summon at international level, say they want to send this summon to Malia, Vijay Malia or Mehul Choksi, etc., then who will send the notice, who will send the summon to foreign country? First of all, there has to be a DTAA between India and that country, and in that case, the summon will not be issued by any income tax authority below the rank of assistant commissioner. So at least assistant commissioner or the higher authority can issue summon in case of international matter for inquiring anything. Below that authority cannot issue summon, plus there has to be a DTAA agreement between under section 90 or 90A. Without an agreement, you cannot issue summon to other country. Okay. Now next, 131 subsection 3, which talks about impounding of books of accounts. Can department impound your books of accounts? And if so, for how many days? Yes, department can impound and keep it in their custody for as much time as they think fit. Okay, for as much time as they think fit. But for certain officers, there are certain conditions which they have to fulfill. Like for AO, additional director and deputy director, they have to fulfill certain conditions. They cannot impound without recording the reasons. So they have to record the reasons with higher authority. And if they want to retain for more than 15 days, then so they have to take an approval from chief commissioner and commissioner also. Okay, so for impounding, first of all, they have to record the reason, and for impounding for more than 15 days, they have to take an approval from chief commissioner and commissioner. Only then they can impound the books of accounts. I hope it is clear to all of you. The third section, 133, power to call for information. I want to call certain information from some people. Who will call? AO will call, CIT appeal will call, JC appeal will call, deputy commissioner appeal will call, joint commissioner appeal will call. To whom they will call? What information they will call? First, they will send the notice to whom? They will send a notice to firm, and they will ask the firm to furnish the details of all the partners and their respective shares in the firm. Okay. They may also send the notice to HUF to furnish the details of all the managers and members of the family. Okay. They may also send the notice to trustee, guardian, agent to give the details of the trust in which they are trustee, to give the details of the children of whom they are guardian, to give the details of the non-residents of whom they are agent, etc., etc., etc. So they can send the notice to these people. They can also send the notice to any assessee to furnish their name, address, etc., to whom they pay rent, electricity, commission, interest, etc. Suppose if I am paying rent to Mr. X, so they can send me a notice and ask me to whom you pay rent, to whom you pay electricity. Electricity not important. To whom you pay rent, to whom you pay commission, to whom you pay interest, so that the government can cross-verify the person to whom we are paying rent, whether that person is showing that as an income or not. Okay. Now, they can also send a notice to dealer, broker, agent, or any concerned person of stock market or commodity market, okay, to give the details of the names and address of the persons who are dealing in stock market. Okay, so they can send the notice to the board, the broker. They can send the notice to Ventura Securities, Zerodha, Grow, Angel Broking. They can send the notice to these people and ask for the details of purchase and sales of any of its customers. Okay, they can send the notice to any person, including the banking company or any officer thereof, to give such information which may be useful for any proceedings for the inquiry. So this is a general point. They can send the notice to any person. Okay. Now this entire power to call information has become faceless under 135A. 135A is a common section which talks about becoming faceless of certain sections. Okay. Certain sections are becoming faceless under the banner of section 135A. Now, if the department has called for information and if you are not giving the information, then under 133B, the department has the power to collect the information from you. They may enter during the working hours, only during the working hours, not after the working hours. During the working hours, they will enter your building, they will enter your place. Which building? Residential building? No. Business building, profession building, where you conduct your business, and they will come and they will ask the proprietor, employees, other person to provide certain important information. Okay. And they will only come and take information. They cannot take anything from your building. They cannot even take your books of accounts, documents, cash, stock, other valuable articles. They are here to collect what? They are here to collect the information from you. So they will come and collect information and they will go away. Okay. Only collecting information is allowed under this section. Nothing else is allowed under this section. Okay. Now 133C, it's a small section. The department has some information in their possession and they want to just verify the information. The genuineness of the information has to be verified by them. For that reason, they are sending you a notice. Okay. So they are sending a notice to verify the genuineness of that information so that they can take the relevant action later on. They don't want to directly take the relevant action. Okay. Now, even this process is going to be faceless, as the government has said in section 135A. Now coming to the power of survey, which is one of the most important section of this chapter. I can say the most important section of this chapter, power of survey. Who can do survey? A survey is nothing but a surprise visit by the income tax authority. Income tax authority will do a surprise visit. Now who can do survey? Which income tax authority can do survey? Let's see. Principal Commissioner of Income Tax can do survey. Commissioner of Income Tax can do survey. Principal Director of Income Tax can do survey. Director of Income Tax can do survey. Joint Commissioner, Joint Director, Additional Director, Deputy Director, Assessing Officer and Tax Recovery Officer. These people can do survey. Absolute power has been given to these people. Now, apart from this, there are other people also who will help in survey. That is, it includes an Inspector of Income Tax, but Inspector of Income Tax will be doing survey only for limited purpose. He will only for the purpose of inspection of books of accounts or other documents, placing marks of identification, etc., inspect books of accounts, making copies thereof, etc., etc., etc. Only this much power is there with the inspector. Inspector does not have absolute power. Now, all these people, whether it is A or B, all of them has to take an approval from Principal Director General of Income Tax, Director General of Income Tax, Principal Chief Commissioner of Income Tax or Chief Commissioner of Income Tax. All of them, whether it is A or whether it is B, all of them have to take what? An approval from the higher authority, which is Principal Director General Income Tax and other authorities. Okay, I hope it is clear to all of you. Now, where they can enter for survey? For survey, they can enter to your business place. They can also enter to your profession place. Now they can also enter to your charitable activity place where you conduct your charitable or religious place, your charitable purposes activity, okay, like your NGOs and etc. There also they can enter. Earlier they used to not enter, but Finance Act 2017 made this amendment. Now when they will enter, where they will enter, that I have told you. Now when they will enter after sunrise but before sunset. They will enter only after sunrise but before sunset. Be very careful, okay. Now they cannot enter in the night. They cannot enter in the night unless your business hours are also in the night, okay. If the business hours is in the night, then they can enter to your business place or profession place or charitable place even in the night also, okay. Now again I am saying they will enter your business place, profession place or charitable activity place. What about if my books of accounts are kept at home? They cannot come to my home? Yes, if the books of accounts etc. is kept at home, then they can enter to your home also. By default they will not come to your home, but if your all the relevant documents and information and books of accounts and assets are kept at home, then they may enter your home also for the purpose of doing what? For the purpose of doing survey. What they will do by coming to survey? They will require the proprietor, they will call the proprietor, they will call the employee, they will call the other person and they will say that we want to inspect books of accounts, we want to inspect what? Other document, we want to check cash, stock, valuable article, we want such other information as may be useful. They might also come for TDS or TCS compliances. They might also come to check your TDS, TCS compliance. Means what? They might come and check whether you are deducting TDS properly or not, whether you are paying TDS properly or not. They might come for that purpose also. Even that power is there with the income tax authority to check the compliance of TDS and TCS. Apart from that, there are certain preliminary powers also, miscellaneous powers like they may place marks of identification on the books of accounts, other documents. They may also impound and retain your books of accounts. They may make a list of your stock, assets and other valuable assets. They may record the statement of any person, and last but not least, they cannot remove anything from your place except books of accounts. Only books of accounts and documents, only books of accounts and documents is something which they can take it from there. They cannot take cash in survey. For that they have to do search and seizure. Search and seizure, and they can take everything except stock. In search and seizure they can seize away everything except stock. They cannot take stock over here. They cannot take your other valuable assets and article. It is not allowed to them, okay. Last but not least, can they do survey in your marriages, functions, events, parties, etc.? Yes, considering the nature and the scale of expenditure, if it is necessary, they may also do survey in your marriages, functions, party, functions, etc. And if you don't cooperate, they will, if you don't cooperate in survey, they may issue you summon for enforcing you for your attendance. And if you don't comply with summon also, then they may initiate what? They may initiate search and seizure against you. A search and seizure power can also be initiated against the assessee if it does not comply with what? If it does not comply with the summon. Okay. Next one is a very small power. Under section 134, the department wants to inspect the registrar of the companies. They want to see the details of the members of the company. They want to see the details of the debenture holders, loaners, etc., lenders, etc. They want to see the details of that. Can they do so? Yes. The AO can do so. The JC appeal and CIT appeal or any person subordinate to him authorized in writing in this behalf, as the case may be, if necessary, take the copies of any register of the members, debenture holders, mortgagee, or of any entry in such register. And such proceeding will also be done faceless now. The department will tell you through online, and you have to send it online only. Okay. I hope it is clear to all of you. Next one is a very important provision. I can say the second important provision of this chapter after survey, and this provision is very important in this chapter. That is provisional attachment. What is a provisional attachment? Provisional attachment means the government will attach your property and now you cannot sell the property unless the government releases your property. Okay. So you cannot sell the property unless the government releases. So when they will make a provisional attachment? Earlier they used to make a provisional attachment only during the pendency of the assessments. Now they are also making provisional attachment during the pendency of the penalty proceeding, but only one penalty proceeding is covered. Not all penalty proceedings is covered. Only one penalty proceeding under 271 AAD. That too, if the penalty is likely to exceed 2 crore rupees, only then they can do what? They can do provisional attachment. In case of assessment proceeding, any assessment they can attach. But in case of penalty proceeding, only one penalty, that is 271 AAD. That too, if it exceeds 2 crore rupees of the amount to be imposed. Okay. Now, why it is done? Why provisional attachment is done? It is done to protect the interest of the revenue, and it will be done with the prior approval of principal commissioner, chief commissioner, principal commissioner, principal chief commissioner, commissioner, etc., etc. And it generally remains valid for a period of 6 months from the date of order. Can it be extended? Yes, it can be extended by the higher authority, which shall not exceed by 2 years. It shall not exceed 2 years or 60 days after the completion of assessment, whichever is later. Okay. So it will be maximum 2 years, or if the assessment is completed earlier, then within 60 days from the assessment, whichever is later it is, whichever is later. So if it is 2 years from here, but if the assessment is completed after 3 years, then it will be after 3 years 60 days, because the law used the word whichever is later. Sir, can the assessee alternative furnish a bank guarantee and release its assets? Yes, the assessee can say to the department that I am ready to furnish a bank guarantee, and the AO in such cases revoke the order for provisional attachment within 15 days. So if you want the asset of that 2 crore rupees asset, 2 crore rupees, 3 crore rupees asset is attached by the department. Now if you want that asset, you can do one thing. You can give 2 crore, 3 crore rupees bank guarantee to the assessing officer and he will release that asset. Okay. Within 15 days. This similar provisional attachment provision is also there in search and seizure, which will come on the next page, 15.3. Okay. Now, powers of the CBDT. CBDT has lot of powers under section 119, and it has powers to give relaxation under all these sections which are mentioned over here. 115P, 115S, 139, 211, 234A, C, 234E, F, 270A. In all these sections, CBDT can give you what? Relaxation. But does the CBDT has the power to make amendment in the provision? No. CBDT cannot make amendment in the provision by issuing circular. That power is only there with the income tax department by going inside the parliament. Only in the parliament a provision can be amended. A provision cannot be amended in the CBDT's office by issuing what? A circular. Okay. Now, can an assessee who was not able to file the return because of some genuine reason, can his delay be condoned? The Madras High Court has said that if it was beyond the control of the assessee to file the return on time, you can give him what? Condonation. CBDT has that power to give condonation under the income tax law. Okay. Now, one last thing over this in this chapter, for which there is no provision under the income tax law, but yes, this concept is there under the income tax law and it is there globally. Protective assessment. Sir, what is protective assessment? Suppose where the ownership of the income is in dispute. I don't know the income is of elder brother or is of younger brother, because fight is going on between both of them in the court of law. Okay. It is a matter of doubt. Then the AO can assess income hands of all the person who are claiming ownership. The AO will say that younger brother is also liable to pay tax, elder brother is also liable to pay tax. This is called as protective assessment. Okay. But the tax cannot be recovered from both the persons. Tax will not be recovered from both the persons. Assessment will be done on both the persons. The objective of the protective assessment is to protect the revenue of the department. Income tax department's revenue has to be protected. That is the objective. So, the example of this, litigation between two parties in civil court or Benami transactions. Benami transactions means the transactions for which illegal transaction for which the ownership, definition of ownership is very difficult to identify. Who is the owner, who is not owner? It is very difficult to identify that in case of Benami transaction. Okay. I hope it is clear to all of you. So, this is what this small topic is all about. So let's go ahead with the next part, and that is one of the biggest power under the income tax law that is there with the income tax department, that is search and seizure. Search and seizure is nothing but your raid. Now for that purpose, section 132 is the relevant section over here, and the very first thing that we need to understand over here, that who can issue search warrant. Because if the assessing officer wants to do a search and seizure, he need to first have a warrant. So who can issue warrant? So for issuing warrant, there are 8 authorities, out of which 4 authorities have absolute power and 4 authorities have to take approval from CBDT. Okay, they don't have absolute power. So who are the 4 authorities who have absolute power? It is Director General, Director, Chief Commissioner, Commissioner have absolute power, and Additional Director, Additional Commissioner, Joint Director, Joint Commissioner. These 4 authorities have power if it is empowered by CBDT. So first 4 authorities have absolute power and the next 4 authorities will be empowered by CBDT, and then only they can issue the search and seizure warrant. Otherwise, they cannot issue the search and seizure warrant. Okay. Now, the second question which we need to answer in this particular chapter, that when can search and seizure be authorized? When it can be authorized because of some reason. No, unnecessarily nobody will authorize search and seizure, right? So if the income tax authority have information in their possession, what they have information in the possession, and with the help of that information, they have reason to believe that you are not complying with the summon under 131 or you are not complying with notice under 142(1). So if the assessee is not complying with summon under 131 or notice under 142(1), and if the income tax department has the information in their possession, with the help of that information, they have reason to believe, they can send you what? They can send you the search and seizure ka warrant. Okay. Second, very important reason because of which search and seizure, maximum search and seizure are done, is if they are in a possession that you are having some illegal money, illegal bullion, illegal jewelry, illegal other assets that represents what? Your undisclosed income. So you have bought the money, you have got the money, you have bought the bullion, jewelry, other assets through what? Through illegal money, through undisclosed income. So in that case also they can issue search and seizure warrant. Now, the reason to believe which the department have, can they disclose that reason to believe with any person? The department cannot disclose. It is very harmful for the informer. If the department started disclosing that we got the information from this informer, people will stop informing to the government about such kind of undisclosed incomes. Okay. Therefore, reason to believe or reason to suspect shall not be disclosed with any person, any authority or appellate tribunal. It cannot be disclosed with any of these people. Okay. Can it be disclosed with court? Yes, with court, with High Court and Supreme Court, it can be disclosed, but it cannot be disclosed with any authority, any person or any appellate tribunal. Okay. I hope it is clear to all of you. Now, once the assessing officer gets the warrant, then the assessing officer gets a lot of power, and therefore now the assessing officer will be called as what? As an authorized officer. Authorized for what? Authorized to do search and seizure. So what are the powers that he will exercise? First of all, he will enter and search lot of places, like he will enter and search building, place, vessel, vehicle, aircraft, where he has reason to suspect that books of accounts, bullion, money, etc. are kept. Now, if the doors are locked, or if the safe is locked, or if the doors are closed, which is locked, and you don't have the keys, then he has the power to break open the lock, door, safe, etc. also, if the keys are not available. Then he has the power to search all the people who go inside the building, who come outside the building, who are inside the building. He has the power to search all of them. Okay. Then he will ask the assessee to give the information, that is the books of accounts, etc. He will ask the assessee to give the passwords, etc. if it is in the electronic form. Okay. So if it is in the electronic form, the assessee has to give the password, etc. Okay. Last but not least, he will now start to seize your books of accounts, documents, money, bullion, jewelry, etc. But he will not seize your what? Stock in trade. In search and seizure, stock in trade cannot be seized. Apart from stock in trade, every undisclosed item can be seized. Or remember, only undisclosed item will be seized. Disclosed item cannot be seized by the department. Okay. Then he will do some basic things like place marks of identification, make the copies of books of accounts, etc., etc., etc. Okay. Now, there is a press release issued by CBDT long back that how much gold a person can keep undisclosed. Okay. How much gold he need not have to explain from where he has got. So for married lady, for explained sources, so there is no limit for keeping the gold. If you are explaining the source, then you can keep 10 kg gold also at your home. There is no limit for keeping the gold. Okay. But for unexplained source, for married lady, 500 grams, no question will be raised. For unmarried lady, 250 grams, no question will be laid. And for male members, whether married or unmarried, maximum 100 grams, no question will be raised for male members. Okay. Now, if reality officer conducting search has a discretion not to seize even higher quantity, so if there is a custom and tradition in your family to keep higher quantity, then even higher quantity may be what? May be exempted by the officer depending upon the facts and circumstance of the case, depending upon the which family he is doing the search and seizure. Okay. Now, let's talk about some related concept to the search and seizure, and that is the concept of deemed seizure. What is deemed seizure? Where it is not possible to take physical possession of any item. Okay. The department is doing a search and seizure, but they are not able to physically take anything because of the volume of the item, because of the weight of the item, because of the physical characteristic of the item, because of the dangerous nature of the item. The department is not able to take those items, and therefore the department will not able to seize those items. So in that case, there is a concept of deemed seizure that we have to apply. The AO will serve an order on the assessee or the person who is in immediate possession, and after receiving that order, that person shall not deal with, shall not sell that, shall not otherwise use it without the previous approval of such assessing officer. So that concept will be called as what? The concept of deemed seizure. Okay. So where it is not practically possible for the department to seize because of the volume, weight, physical characteristic, or because of the dangerous nature, the department will give a notice to the assessee or the person who is in possession that do not sell it or otherwise use it without asking me. That is known as deemed seizure. Even deemed seizure cannot be done for stock in trade. Stock in trade is not allowed to be even deemed seized. Okay. Now next question is order of restraint. Sir, what is order of restraint? Order of restraint is but it is not practicable for the department to seize anything for other than these reasons. For other than these reasons, if it is not possible for the department, for example, I have told you in class also, there was a search which was done in the house of Mr. A. Now, Mr. A, in the bedroom of Mr. A, nothing was found. So the department went to the brother of Mr. B, who is the brother of Mr. A. Okay, the department went to the brother of Mr. A, that is Mr. B's bedroom, and they found some jewelry over there. Now that jewelry, Mr. B is saying that it is his jewelry. Okay, Mr. B is saying that it is his jewelry, but the department is having a doubt whether it is his jewelry or whether it is assessee's Mr. A jewelry. Therefore, the department can serve an order of restraint for a period of 60 days. Order of restraint does not amount to seizure. It is just a restraining order that for 60 days, please do not sell the jewelry. For 60 days, do not sell it. For 60 days, do not get away with this jewelry. You have to keep it with yourself. Okay, we are not taking the jewelry. We are giving the jewelry to you only, but you are not supposed to sell the jewelry for 60 days. That's it. Okay, next one, jurisdiction of CIT concept. What is this jurisdiction of CIT concept? Suppose there is a property in Bombay in which there is some undisclosed assets kept. Now the CIT of Mumbai is aware of this particular property in Mumbai where there is what? Undisclosed asset. Who is aware of that? Mumbai CIT is aware of that. But he cannot search that property. Why? He does not have power to search that property. Why? Because the property belongs to a person who is a resident of Delhi. So in that case, logically speaking and lawfully, what a person has to do, what CIT has to do, the Mumbai CIT has to make an application to the Delhi CIT, and then Delhi CIT will give an approval, and then only a search and seizure can be authorized. But if the government feels that, if the Mumbai CIT feels that delay in getting the authorization would be detrimental to the interest of the SSC, will be detrimental to the interest of the department, will be prejudicial to the interest of department. So if delay in getting the approval from the Delhi commissioner will be prejudicial to the department, then the Mumbai commissioner may authorize the Mumbai AO to do the search and seizure in the interest of the revenue. I hope it is clear to all of you. Now, when the authorized officer go for search and seizure, along with the authorized officer, they may take police officer, or they may also take officer of central government, or they may take both also for their protection. Okay. Now, Finance Act 2023 has made an amendment that they may also take any person or entity as approved by the principal chief commissioner, principal director general, or director general as may be prescribed. So the government is planning to make one entity, or the government is going to prescribe few persons who may also help for the protection of what? For the protection of the income tax department officer while doing the search and seizure. Okay. Last but not least, then we'll move on to the next part. The AO may examine and on oath on any person. The AO may take oath of any person, and that oath may be used as what? As evidence under any proceedings under the Income Tax Act. Okay, let's move on to the next provision. That is very important provision for the exam. Presumptions in the course of search and seizure. What are the presumptions that an officer will make in the course of search and seizure? There are three presumptions that the department has said that the officer has to make during the search and seizure. That is, if he finds something in the hands of some person, then he has to say that it belongs to such person. It belongs to you. Now you prove it. If it does not belong to you, then it belongs to which person? Okay. So if anything is found in possession of any person, it belongs to such person. This is the first presumption that the officer will make. And second, if the officer finds any books of accounts, documents, he has to prove that it is wrong. Unless it is proved, it is deemed to be true. Okay. It is presumed that it is true. It is presumed that the contents are true. If it is not true, it is the duty of the officer to prove it that it is not true. Okay. Third one, if he finds any documents in the hands of any person, then it will be said that it is written by that person only who is holding it. It is stamped by that person. It is executed by that person. It is attested by that person. Everything is done by that person only who is in the possession of that particular asset. Okay. I hope it is clear to all of you. So if anything is found in your hand, it belongs to you. If the content is true and the handwriting is yours, the signing is yours, attestation is yours, everything, stamping is done by you only. And if it is not done by you, you have to prove it. It is done by which person? Okay. Now, during the search and seizure, lot of assets are seized by the department. Now the department wants to what? Value those assets. So they can take the help of valuation officer within 60 days from the date on which the search was completed. Okay. So within 60 days from the date in which the search was completed, or during the search also, if they want, they can make a reference to valuation officer. Or the government has made one more point, in Finance Act 2023, they can take the help of any other person, entity or any registered valuer under any law which the central government may prescribe and which will be approved by Principal Director General, Principal Chief Commissioner and Director General. Okay. So these people will make one organization, one entity will be formed, one person will be formed, which will be working like what? Like a valuation officer. Okay. Then the valuation officer has to submit this report within how many days? Within 60 days. Within 60 days from the date of receipt of such reference, the valuation officer will submit what? Will submit the report to the department. Okay. Next, provisional attachment. Here also it is there. Yes. If the department wants to provisionally attach your property after search, so during the search or within 60 days, the AO may provisionally attach your property after prior approval from Principal Director General, Principal Director, Director General and Director, and it will have an effect for how many months? It will have an effect for 6 months. So during search and seizure also, if the department wants to protect the revenue, they may attach your some properties. Okay. I hope it is clear to all of you. Now, this is a very small clarificatory amendment on which date it can be said that the search is completed. The search is said to be completed on the date on which the last panchnama is drawn by the department. So, when the department makes a panchnama, that day is called as the day of completion of the search. Okay. Nothing great is there, not a very important amendment. Let's move on to the next paragraph. Period of retention of books of accounts and documents. For how many days the books of accounts and documents will be retained by the department? So the department says that we will complete the assessment after search and seizure. There is an assessment which is completed, and after the assessment is completed, whether it is regular assessment, best judgment or income escaping assessment, whatever assessment is there, they will return you after 30 days. Okay. Once the assessment is completed, after 30 days, they will return you. Okay. Now, after that also, if they want, then they have to record the reasons for the same and they have to take an approval from the higher authority. And if they want after that also, after that, why will they need, sir? Maybe they want to impose some penalty proceedings. That is the reason they want the books of accounts, etc. to be retained by the department. So after that also, if they want, they can keep it, but with the approval of higher authority. And once all the proceedings are completed, like penalty proceedings is completed, after 30 days of that, after 30 days of completion of the penalty proceedings, so they have to return only. Then they cannot keep it with them. Then there is no chance that they can keep it with themselves. Okay. I hope it is clear to all of you. Next, sir, till the time it is there with the department, it is there with the custody of the department, can I ask the assessing officer to make a copy of it, photocopy of it, xerox of it? Yes, you can tell the officer to make a copy. Officer will tell you the place and the time, and accordingly he will call you. You can take the copy and you can go it. Okay. Next one, sir, search is going on at the place of Mr. A. And if there is something which is found which belongs to Mr. B, what is the duty of the assessing officer in that case? So if I am an assessing officer, I am doing your search. You are Mr. A. And if I found some goods, some assets, some money, bullion, jewelry belonging to your friend Mr. B, what is my duty? My duty is to hand over to the assessing officer of Mr. B within 60 days. Check please. Within 60 days, I will hand over all those things to the assessing officer of Mr. B. I will not do anything else. Okay. 132A, very important section. So listen carefully what I am trying to say with respect to 132A. Power to requisition books of accounts, etc. I want to do your search, but I know that even after doing the search, I am not going to find anything. Why? Because your books, your documents, your money, bullion, jewelry is already seized by other authorities, like customs authorities, like FEMA law, like PMLAs, like GST people, like different laws people have already done what? Search and seizure from you, and they have already taken everything in custody. So what is my duty in such case? As an assessing officer, if the books of accounts money are under the custody of any officer under any law, what is my duty? My duty is to request him that, please sir, if you don't require it, please hand it over to me, and that will be considered to be a seizure on account of the income tax department. So if the books of account, documents, money, bullion, jewelry is with other authority, and you can only do a request to them, and if they no longer require it, they will give it to you, and then you can do your search and seizure assessment after that. That will also be called as what? As a seizure only. The moment you take it from the other authority, that is as good as seizure only. Okay. Now, whatever assets are seized by the income tax department during the search and seizure, how will they use that asset? Against which liability they will use it? They will recover which all things out of that seized asset? So let's see that. It is a very important section. 132B, very important. They will recover the following things. First of all, they will recover your existing liability under Income Tax Act, even under Wealth Tax Act. and even under Gift Tax Act, if any. So they will recover your existing liability first of all out of the seized asset. Then they will also recover your liability which will be determined on completion of assessment or reassessment, which will be done after the search and seizure. After search and seizure, income escaping assessment will be done on you. So they will be doing what? They will be recovering that also from there. They will also recover penalty and interest from there. Okay. Now, existing liability will not include advance tax. They will not include advance tax recovery from there. If there is some advance tax liability of the current year, they will not recover that from the seized asset. Okay. Now, there is one proviso which is giving you some kind of benefits. Listen carefully. Very, very, very important proviso and very important benefit is given by the department over here. Listen carefully. Suppose today search is happening. And if the department is seizing something and if you are not able to explain the source, the department is giving you 30 days time from the end of this month. You can come and explain the nature and source of your asset, and then the department will give you back your asset after reducing the existing liability. So you have to come today, search and seizure happened, you are not able to explain the source, department will seize. Come within 30 days from the end of this month. So let this month complete. After that, you have 30 days time. You can come and explain to the assessing officer the nature and the source of the asset, and he will recover the existing liability. Whatever is the existing liability, he will recover, and the balance he will return you back. Okay. In how many days? In 120 days, he will return you back the balance assets. Okay. From the date of completion of the search. Sir, how will the liabilities are discharged, sir? The department has seized my money also. They have seized my asset also. So first they will recover the tax from money, and if money is not sufficient, then they will sell your assets. Okay. So first they will not sell your assets. First they will recover the asset. First they will recover the tax from the money portion, and if the money portion is not sufficient, they will recover the tax from where? From the sale of assets and discharge it. Okay. And after the completion of the assessment, they will return you the assets if it is not required, and if the department does not return you the asset, then the department will be liable to pay interest at the rate of 0.5% per month or part thereof. The department is liable to pay me interest. Yes, the department will be liable to pay you interest if they do not return you the unutilized assets which is not utilized for the purpose of payment of taxes. Okay. So this is what this small topic is all about, search and seizure, and that would be relevant in this topic now, that is income escaping assessment. Let's talk about one last assessment of our syllabus, that is 147, but the biggest out of all the assessment, out of the 3 assessments that we have done, income escaping assessment. What is income escaping assessment? Income escaping assessment means you have escaped some income earlier, and now the AO has come to know about that income now. So now he will open your old assessments and he will take taxes from you. Now 147, income which is escaped earlier, 147 is subject to 148 to 153. If the AO wants to assess your income, then he has to follow the entire procedure from 148 to 153. Without that, he cannot do your income escaping assessment. Be very careful. Okay. So if you want to complete the assessment, 147, he has to follow 148, 149, 150, 51, 52, 53. Then only he can assess your such income and also any other income subsequently noticed during the proceeding. So while doing the assessment, if he finds some other incomes also which you have escaped earlier, he can do the assessment of that incomes also against you. Okay. So let us talk about one by one aspect. First of all, income escape means what? Income can escape because of whom, sir? Because of whose default income can escape? Now see, income can escape because of assessee's default first of all. If it is escape because of assessee's default, assessee has made a genuine mistake of not including certain incomes, then the department will do 147, the department will take tax, the department will take interest, and penalty will also be imposed on the assessee. Okay, but income is escaped not because of assessee's default, but it is escaped because of subsequent development in the law. It is escaped because of what? Subsequent development in the law. The AO has allowed you the deduction earlier, but later on the Supreme Court in some other case says that no, this expenditure is not allowed as deduction, or there is a retrospective amendment made by the law that this deduction is retrospectively disallowed. Then this is called as subsequent development in law. So if there is a subsequent development in law, that is also lead to what? Escapement of income, and 147 assessment will be done on you, and in that case there will be tax which is imposed on you, but interest and penalty will not be imposed on you. Don't worry about it. Okay, you will be escaped from what? You will be escaped from interest and the penalty portion. Now as I have told you just some time before that if you want to do 147, then the department has to follow section 148 to 153. So let's talk about 148 first of all. What is 148? In 148, the very first thing that the department has to do, the department has to conduct an inquiry under 148A first. What is 148A? That we are going to see on the next page after some time. Okay, after some time we will see that. But department has to do an inquiry under 148A if they want to send a notice under 148. So what is 148? 148 is nothing but a notice which will be served to the assessee requiring the assessee to file the ROI, requiring the assessee to tell the ROI to to tell the assessee that you have to file the ROI now. The assessee will say that I've already filed the ROI of earlier year. Now the department is saying that now you have to again file an ROI as per section 148. But before sending this notice, again I am saying the department has to conduct what? An inquiry under 148A. So the notice which is sent to the assessee under 148 for filing the ROI, it has to be filed within how much time? So here there is an amendment. Earlier, the time limit used to be mentioned in the notice, but now the department has given the time limit that it has to be furnished within 3 months from the end of the month in which such notice is issued. Okay. So in whichever month the notice is issued, suppose the notice is issued in the month of March 2024, then the return has to be filed by 30th June 2024 within 3 months. And if you don't file the return within 3 months, then the department will not send you any scrutiny notice and will directly do your best judgment assessment. Okay. So if you don't file the return on time, the department will do your best judgment assessment under the income tax law. Okay. So you need to understand this provision with a lot of procedure. Huh? It's a proper procedure you need to find out. What is the first thing that you have to keep it in mind? You have to first send an inquiry notice. Okay. Under 148A. After inquiry is done, you will send a notice under 148 to file the ROI. And within 3 months, the assessee will file the ROI. Okay. Now, to send the notice, there has to be some reason not to send the notice. No notice shall be sent unless there is an information with the AO. AO should have information that your income has escaped assessment. Okay. So, unless the AO has information that you have escaped assessment, the AO cannot send you notice. So, what do you mean by the phrase information with the AO which suggests that income chargeable to tax has escaped assessment? This is a very long phrase but very important phrase. When can AO send you notice? When AO has information that income chargeable to tax has escaped assessment. Sir, what do I mean by this phrase? This phrase is explained in explanation 1 to section 148. If any of the 5 things are happening, then it can be said that the AO has information which suggests him that you have done some wrong thing and 148 notice can be sent to you. The very first thing, the AO has information that in case of an assessee in relation to the risk management strategy framed by the board from time to time. What is risk management strategy? That is AO has information from the SFT and AIS which is framed by the department to get some information. From there the AO is getting information that you have escaped some income and that can give the AO the power to issue notice under 148. Second, the AO has got an information from the audit objection from the auditor. He has got the information from the audit report of any auditor that you have escaped some income. Or the AO has got an information from the DTAA, from the foreign authorities he has got some information. Or the AO has got an information from 135A. What is 135A? I have told you in the chapter of Income Tax Authority, where you call the information, where you collect the information, etc. Do you remember that? All of them are covered in 145A. Or where you get the information from the registrar of the companies. All those are covered under 135A. So where the AO get the information from? 133C, 133, 133B or 134. All these sections are covered under 134. Go and 135A, go and check the chapter of Income Tax Authority. So if the AO gets information from there, then it can be said that the AO has information which suggests that income chargeable to taxes escaped assessment. Next one, any information which comes to the AO in consequence of a tribunal or court order. If there is a tribunal order which says that this expenditure should be disallowed, then that can be an information through which the AO can send you notice. Or if there is a High Court or Supreme Court order which says that this income should be taxed, then that can be the reason for the AO to go for section 148. So out of these 5 cases, if any of the 5 cases AO identifies, he can send you notice under 148. There are few cases in which it is deemed escapement. Deemed escapement means there is no need for this information in those cases. So what are those cases in which the AO can directly say that there is a deemed escapement? It is given an explanation to section 148. There are 2 cases in fact. There are 4 points but cases are only 2. That is, if there is a search initiated against you on or after 1st April 2021 or if there is a survey initiated against you other than 133-2A survey. 133-2A survey is TDS and TCS survey. Do you remember that survey can also be done for TDS and TCS? Ignore that. TDS and TCS survey is not covered over here. Apart from that, all other survey which is conducted on or after 1st April 2021. The third and the fourth point is also with respect to search and seizure only. Okay, you can check it over here. So if on or after 1st April 2021, if there is a search conducted on you, okay, or on or after 1st April 2021, if there is a survey other than TDS and TCS survey conducted on you, then the AO will directly send you notice under 148. He do not have to prove that there is some escapement. It is deemed to be escaped in that case. I hope it is clear to all of you. Is it clear all of you? Step number 4 and the last step. Moreover, prior approval of the specified authority shall be taken to issue notice. That is okay. So if the AO wants to send you notice, he has to take what? A prior approval of the higher authority. Who are those higher authority? That I'll be showing you in some time. Okay. So what is section 148? 148 says that
before sending 148, you have to conduct inquiry under 148A. Okay. So before conducting the inquiry under 148A, before sending the notice under 148, conduct inquiry first under 148A, then send the notice under 148 to file the ROI within 3 months. But before sending the notice, AO has to prove that he has information which suggests that income has escaped assessment. 5 points. But in two cases, search and seizure, and in case of what? In case of survey, there is no need to prove those 5 points. Okay? He can directly send you the notice. Now, let us talk about what is an inquiry notice. Inquiry notice is nothing but the opportunity of being heard given to the assessee. Okay? So before issuing notice under 148, the AO shall conduct inquiry with the prior approval of the specified authority that the information which income suggests that income chargeable to tax has escaped assessment. Okay. So before issuing the notice under 148, AO shall give an opportunity of being heard to the assessee. How he will give an opportunity of being heard to the assessee? He will issue a show cause notice to the assessee and ask the assessee why 148 should not be done against you. Okay. Why 148 should not be sent against you? Why should I not send you 148? Then the AO will give time to the assessee. How much time the AO will give? The AO will give minimum 7 days and maximum 30 days. It can also be extended on an application by the assessee. So AO will give 7 to 30 days subject to some extension which the assessee may ask for. Okay. Now, before issuing the notice under 148, the AO will definitely consider the reply of the assessee. Whatever reply the assessee has given, the AO will consider that. And then after taking the reply of the assessee, the AO will decide whether or not it is a fit case for 148. If the assessee gives a genuine explanation, he will drop the proceeding. He will not go ahead. But if the assessee does not give a genuine explanation, then the AO will issue notice under 148. For that, he will pass an order under 148A subsection D. So 148A clause D. Okay. The AO will pass an order that this is a fit case for what? Fit case for section 148. Send 148 to the assessee, and such order will be passed within 1 month from the end of the month in which the reply is what received by him. Or where assessee does not reply, then in that case, the AO will pass an order within 1 month from the end of the month in which the time or extended time expires. Okay. So if the assessee replies, then within 1 month from the end of the month in which he replies, and if the assessee does not reply, then within 1 month from the end of the month in which the time limit is expired, okay, the AO will pass the order. Okay. Sir, is it necessary to conduct inquiry always? No. In some cases, the inquiry is also not necessary. Like in search cases, inquiry is not necessary. Sir, in survey cases inquiry is mandatory. Okay. In survey cases, inquiry is mandatory. In search cases, inquiry is not required. In search cases, inquiry is also not required. And in search cases, there is no need to prove also that the AO has information. AO can directly send 148. In survey cases, there is no need for inquiry. But in survey cases, the AO has to prove that he has information which suggests that income chargeable to tax. Sorry, in survey cases, the AO has to do an inquiry. AO, because inquiry is not excluded here. In survey cases, AO has to do an inquiry, but there is no need to prove what? The income information which suggests that income chargeable to tax has escaped assessment. One last thing in which there is no need to have any kind of what? Any kind of inquiry, that is 135 cases, where the department has already sent you a notice and call for information, the department has already seen your register of companies, etc. In that cases also, there is no need to do a separate inquiry. Okay, this is what section 148 and 148A is all about. Very, very important part of this particular chapter. Okay, now very some small part is there, then again some important part will come, which I'll be addressing one by one. First of all, prior approval in certain cases. If an order has to be passed below the order of what? Below the rank of JC. Okay. No order of assessment or reassessment or recomputation shall be passed by AO below the rank of JC, except with the prior approval of additional commissioner, additional director, joint commissioner, joint director, if it is related to search, survey and requisition of books of accounts. Okay. So if the cases is of search and seizure and requisition of books of account, or if the case is of survey, and if the AO is below the rank of JC, he himself cannot pass the order. He has to take an approval from higher authority. He has to take an approval from higher authority. AO below the rank of JC cannot directly pass a search and seizure order, or cannot directly pass what? A survey order without taking an approval from higher authority. Now coming to a very important issue. Sir, what is the time limit to issue notice under 148? The time limit to issue notice under 148 is amended with effect from 1st April 2021. Earlier the time limit was different. Now the time limit is different. I am not interested in the old time limit. I am interested in the new time limit. I will be speaking only the new time limit, not the old one. Okay. Now what is the new time limit? In normal cases, the department will send you notice, will issue you notice. The department will send you notice within 3 years from the end of the relevant assessment year. Okay. So how it will be computed? That is for previous year 23-24. What is the time limit? For previous year 23-24, the time limit would be previous year 23-24, ignore that. Take assessment year. Assessment year 24-25. So within 3 years from the end of 24-25, that is till 31st March 2028, the department should issue you the notice. Issue means the department should send you the notice. You may receive the notice after 3 years,
but department should send the notice within 3 years. Okay, but in some cases the department says that your notice can be issued up to 10 years also. Which are those cases? It can be issued beyond 3 years but not beyond 10 years. Which are those cases where it can be issued beyond 3 years but not beyond 10 years? Where you have been having some assets, or you have been incurring some expenses, or you have passed some journal entries in the books of accounts, and your escaped income is likely to be of 50 lakhs or more per assessment year. Okay, 50 lakhs or more. It's not actually per assessment year, it's actually aggregate of all the assessment years. Okay, so if your income is 50 lakhs or more, you have escaped 50 lakhs or more in aggregate of all, and that income is represented in the form of asset, or it is represented in the form of expenditure, or it is represented in the form of book entry, then the department will send you notice for even beyond 3 years up to 10 years. Sir, what does asset include? Asset include immobile property, asset include land and building, both shares and security, loans, deposits in bank account. These are the things which are there in the definition of asset. Be very careful. For example, previous year 23-24, assessment year 24-25, you have purchased some land of 80 lakh rupees. Now after 7 years the AO caught you. So after 7 years AO caught you, AO asked you from where you have got the land. So you have said that I have purchased this from previous year 23-24 income. So AO can open reassessment even after 7 years, because your income is 50 lakhs or more and it represented in the form of land. Okay, it is represented in the form of what? Land, which is an asset. Or if you have done some marriage in 23-24 of 1 crore rupees, after 7 years the AO caught you. From where have you done this marriage? So that you said that you have done it from the income of 23-24. So AO can catch you and AO can do assessment on you for even after 3 years, but up to what? Up to 10 years. If the assessment is done for, however the investment in the aforesaid asset or expenditure in relation to is more than 1 year, then the notice under 148 shall be issued for every such a while. If the AO finds that you have done mistakes in multiple years, then the AO will send you notice for all the multiple years. He has to send notice for all the respective years to you. I hope it is clear to all of you, right? Now there are some amendments which are made by Finance Act 2023. One is third proviso to section 149 and another is fourth proviso to section 149. I would like to explain you both these provisos one by one through an example which I have created over here. You can see over here, please, all of you. This is the third proviso to section 149 subsection 1. What is the amendment over here? Let me explain you with the help of this example. Pay attention, please, all of you. Now previous year 23-24 is going on. This is assessment year 24-25. Now suppose in this year you have escaped an income of 10 lakh rupees. So now for this year the notice can be sent maximum for how many days, till how many years? 3 years from the end of the relevant assessment year. Now 3 years from the end of the relevant assessment year will come to 31st March 2028. The due date will be the last date to send the notice to the assessee. Okay. But now just around 15 days before that, that is on 25th of March 2028. The law says that in the last 15 days something is happening. Suppose in the last 15 days search and seizure is happening on 25th of March and the assessee has escaped 10 lakh rupees in 23-24. So in that case the AO will get 15 days extension in this particular case, and in that case the AO will send you the notice by 15th of April 2028, and if he sends after 15th April 2028 then it will become invalid. Okay. The law says that the time limit is, see, what is the amendment? Let me tell you. The time limit is getting expired on 31st of March 2028. And if in the last 15 days, the AO do a search and seizure. If in the last 15 days, the AO do search and seizure, then the AO will get 15 days extra time. Okay. Now, if the search is done in the first week of March, then he will not get extra 15 days. It is only allowed if it is done in the last 15 days. Okay. So this is what the third proviso to section 149 wants to tell us. Okay. Now, what is the fourth proviso to section 149? It is also similar but slightly different. Let me explain you with the help of example once again. Previous year 23-24 is going on. Assessment year 24-25 is going on. What is the time limit to issue notice? It is 3 years from the end of the relevant assessment year. So relevant assessment year is 24-25. So 3 years from the end of year will come to 31st March 2028. Now search is not happening. Now AO got information through a summon under 131, or AO did survey at your place, at your office, or at your business or profession place or charitable place, and he got information from there that assessee has escaped income. Okay. So based on that information, AO did search. Okay. Based on that information, AO did search. Now the information did not came from search and seizure. If the information would have come from search and seizure, now there is no need to do inquiry also. But if the information is done, if is got from what? Summon or survey, the AO has to do an inquiry. Okay. The AO has to do an inquiry, and 148A inquiry is mandatory, because just now I have told you that if the reason for doing the assessment is search and seizure, then there is no need to do inquiry. But if the reason is any other reason like summon, survey, etc., then the AO has to do, first of all, conduct inquiry under 148A, give assessee 7 days to 30 days time, then only the notice under 148 can be done. So in this case, it will take some time. So again, in the last 15 days, all these things are happening in the last 15 days. then in that case, the AO will give you 15 days extension. The AO will get 15 days extension. He can send the notice up to 15th of April 2028. So these are the two provisos which talks about this point. Not very important. I don't think so. It's very important for exam. Okay. Now, then there is some old time limit which is mentioned over here. I'm not interested in the old time limit because old time limit is just for your practical purpose, not for your academic purpose. For practically, it may be relevant because if somebody is getting notice of 2018, 2019, 2020, old time limit would be relevant. But academically, it is not relevant. Now, again and again, we have been saying that for the purpose of issuing notice, the AO has to take a sanction from higher authority. Who is the higher authority from whom the AO has to take sanction? It is mentioned in section 151. Now, there are two cases over here. If the notice is issued up to 3 years, then the sanctioning authority is principal CIT, principal director of income tax, CIT and director of income tax. And if the notice is for more than 3 years, that is if the notice is of that of 50 lakh cases, okay, that 50 lakh escaped income cases, in that case, if you want to send the notice, then the notice will be sent by principal chief commissioner, principal director general, and this is deleted by Finance Act 2023, or chief commissioner or director general. Okay, only these four authorities. Earlier it was written that if principal chief commissioner or director general is not there, then CIT or chief CIT or director general can give. Now even chief CIT or director general can send you notice even in the presence of these two people. Even in the presence of these two people, they can send you the notice. Don't worry. Okay. Now coming to the next point, which is a very, very, very important Supreme Court judgment, Sun Engineering Private Limited, a landmark judgment of Supreme Court. Be very careful with this. Okay. What has happened in the assessee's case, that assessee has shown an income of around, say, let me give you an example. Earlier, assessee has filed an ROI, and in the ROI, assessee has shown an income of 10 lakh rupees. Okay, income of 10 lakh rupees. Now, the AO came and AO disallowed 15 lakh rupees. So the assessed income of the assessee is 25 lakhs. Okay. So AO disallowed 15 lakh rupees unnecessarily, even though the Supreme Court has allowed such particular expenditure in some other case. Supreme Court has allowed that particular 10 lakhs in some other case. Still the AO came and AO what? AO disallowed. What is the assessee stand in that case? Assessee should have appealed. Assessee should have gone for rectification. Assessee should have gone for revision, but assessee did not do anything. That is assessee's fault. Now after 5 years, after 6 years, the AO came up with 148 notice, and AO said that you have escaped an income of 25 lakh rupees. So now the assessee is showing 25 lakh as income, and from that income, assessee is reducing what? 15 lakh rupees. His what? 15 lakh rupees, which was disallowed, wrongly allowed earlier, that is reduced by the assessee. So is that allowed? Is that allowed? So again, I am saying assessee has shown an income of 10 lakh rupees under the ROI. The AO wrongly disallowed 15 lakh rupees. Therefore, assessee's total income was 25 lakhs. Now, after 5-6 years, the AO sent a notice that you have escaped an income of 25 lakh rupees. So, assessee showed 25 lakhs and assessee reduced what? 15 lakh rupees, which was wrongly disallowed earlier. Will the Supreme Court allow this? The Supreme Court said no. The matter which are concluded earlier, it cannot be reduced now. Section 147 is not for the benefit of the assessee. It is for the benefit of the department, and all those matters which are concluded earlier, those cannot be reduced here, and therefore this is not allowed. 25 lakhs earlier income, 25 lakhs new income, 50 lakhs income, you have to pay the tax. But then the government brought one section, section 152, and said that if the escaped income is greater than wrong disallowances, then you apply Sun Engineering and you pay tax on 50 lakhs. But if the escaped income is less than the wrong disallowance, here how much is the escaped incomes? 25 lakhs. And how much is the wrong disallowance? 15 lakhs. Is the escaped income greater than wrong disallowance? Yes. Apply 147 and take tax on 50 lakhs. But if the escaped income is just 10 lakhs and the wrong disallowance is 15 lakhs, then 147 shall be dropped in that case. Okay. So you have to compare with your escaped income with your what? With your wrong disallowance. If the escaped income is less and the wrong disallowance is more, 147 shall be dropped by the income tax department. This is what this particular provision wants to tell you. One last thing that I would like to say over here is, pay attention please. What would be the tax rate to be charged on escaped income? Sir, what is the tax rate to be charged on escaped income, sir? Of which year? It will be of the year to which it pertains. If you are charging an escaped income of 2020-21, then tax rate of 2020-21 will be applied today. Okay. Now, one last thing that I would like to say before I can go ahead with the next part, that is, what is the time limit to complete assessment? First of all, I will say the time limit for these two sections. Which two sections? That is 143 and 147. What is the time limit to complete assessment? It is given in the chapter of time limit, but I am saying it right now only. It is given in 153 subsection 1. The time limit to complete assessment is 12 months from the end of the relevant AY. It is an amendment made by Finance Act 2023. Till last year it was 9 months from the end of relevant AY, but now it is 12 months from the end of relevant AY. So 12 months from the end of relevant AY, AO has to complete the assessment, okay? And in 147, the time limit is given in 153 subsection 2. The time limit is given for what? 147. Sir, what is the time limit to complete 147? The time limit to complete 147 is, listen carefully please all of you, it is 12 months from the end of the financial year in which the notice under 148 is served to the assessee. So in whichever year the notice under 148 is given to the assessee, it is served to the assessee. From the end of that year, 12 months time limit the assessing officer will get. Now in all the 3 sections, the AO will get 12 months extra if the matter has been to transfer pricing officer. If the matter has been taken to transfer pricing officer, 12 will become 24 months in all the cases. I hope it is clear to all of you. So side by side, I am telling you the time limit also. There is a separate chapter on time limit. You can refer there also, but I am saying it right now only. Now, here all the assessments are completed. Now we are targeting all our remedies now. What are the various remedies under the income tax law? We are going to target them one by one. The very first remedy that we are going to talk about today is the rectification of mistake. So if there is any order which is passed by the income tax authority, or if there is some intimation which is passed by the income tax authority, the income tax intimation, the TDS intimation, the TCS intimation, whatever intimation it is passed, or any kind of order, assessment order, appeal order, rectification order, penalty order, prosecution order, any kind of order, in that if there is an apparent mistake made by the income tax department, so whoever made an apparent mistake will rectify that order, okay? Will rectify that order. So there has to be an order, there has to be an intimation. Order can be of any type, intimation can be of any type, and there has to be an apparent mistake. Sir, what do you mean by the term apparent mistake? Apparent mistake means a mistake which is very obvious, for which there is no two views possible, there is no argument possible. It is a very genuine mistake, it is a very apparent mistake. Those kind of mistakes are called as apparent mistake. A very genuine mistake, a very appealing mistake which you can see and very clearly say that it's a mistake by the income tax department. So if there is an apparent mistake, you can rectify that, okay? Now, can ITAT rectify an apparent mistake? No, ITAT cannot rectify an apparent mistake under 154 because ITAT is not an income tax authority. Yes, but for ITAT, the government has made a separate section under section 254 subsection 2. There they can rectify an apparent mistake. But ITAT cannot rectify its mistake under section 154. It is not possible. Okay. So how rectification is done? Rectification is also a proceeding. It is also done by passing a rectification order. Okay. And if you are not happy with that, you can appeal against rectification order. You can again go for rectification against rectification order. You can also go for revision under rectification order. Now the next point is very, very important. Listen carefully all of you. Suppose if there is some Supreme Court judgment in some other case, can I take that as an example to rectify my order? Yes. If there is a Supreme Court judgment in some XYZ person's case, some other person's case, and in that case the Supreme Court has said that this expenditure is allowed. So you can take that as an example, as an apparent mistake done by your AO, and you can rectify that order. But High Court judgment cannot be considered to be used as an apparent mistake. But if the AO has done anything against the Supreme Court judgment, then your AO has done apparent mistake. Or if the AO has done anything against a High Court judgment, then it cannot be called as an apparent mistake. Okay. Now, who can initiate the proceeding under this section? It can be initiated by the income tax authority himself. Income tax authority can suo motu rectify. It can also be brought to the notice by the assessee. Assessee can also make an application to the income tax department, or even AO can go and tell to the CIT appeal or Joint Commission appeal during the appeal proceeding that, sir, I have made a mistake. While your proceeding is going on, you please rectify that mistake. Okay. And if the rectification leads to enhancement of tax liability, then you have to give an opportunity of being heard to the assessee. That is the fundamental right of every assessee. Okay. I hope it is clear to all of you. Now, coming to the time limit. What is the time limit by which the department will rectify your order? Now, if the department is suo motu rectifying the order, then they will rectify within 4 years from the end of the financial year in which the order sought to be amended was passed. So whichever year the order was passed, say the order was passed in 21-22. So within 4 years from the end of 21-22, they will rectify the order. Now, if the assessee makes an application, then the department will rectify within 6 months from the end of the month in which the application is received. And if the department does not rectify within 6 months, then it is deemed to be in the favor of the assessee. Okay. So in suo motu, department will rectify in 4 years. And if the assessee makes an application, then the application after received within 6 months from the end of the month in which it is received. Okay. Now the very important question is both the time limits
are for what? Are for passing the rectification order. What is the time limit for making a rectification application? The law has said that the department has given a CBDT circular that the application has to be made within 4 years. If the application is made within 4 years, the department will rectify the order within to the advantage of the SSE. Okay, but the application has to be made within 4 years. Within 4 years, if the application is made, then the department will pass the order in your favor. Don't worry about it. Okay. Now there is one Hind Wire Industries Limited case law. I'll tell you the facts of the case. The AO has passed an order in which there are 2 mistakes. Okay. How many mistakes? 2 mistakes. Now after 3 years, the SSE made an application to rectify 1 mistake. The AO rectified 1 mistake after 3 years. Now again after 3 years, that is 3 years from rectification order and 6 years from original order. So again after 3 years, the SSE made an application for the second rectification. Can the SSE make an application for the second rectification? The question is whether the time limit will be counted from the original order or the time limit will be counted from the rectified order. The law said that, the court said that the time limit to rectify the order is within 4 years from the end of the financial year in which the order sought to be rectified was passed. An order sought to be rectified need not be original order. It can be a rectified order. If an SSE has made an application to rectify one order, to rectify one mistake, is it not the responsibility of the assessing officer to rectify another mistake also suo motu? Why he has not rectified? It means the rectified order itself contains a mistake and now the SSE is making an application to rectify the rectified order. The SSE is not making an application to rectify the original order and therefore the time limit will be counted from the rectified order and not the original order. Okay, this is what these 2 case laws has to say. Even Tony Electronics Limited has to say the same thing. Hind Wire Limited has to say the same thing. Both of them are saying the same thing. One is of Supreme Court, one is of Delhi High Court. One last thing in this chapter, then we'll go ahead with the next proceeding, that is appeal proceeding. Okay. Now, doctrine of partial merger, very important concept. This concept comes here also. This concept comes to section 263 also. In section 263 also this concept comes, doctrine of partial merger, and in 154 also doctrine of partial merger comes. But in 264 the concept of doctrine of complete merger comes. Okay. In 264 doctrine of complete merger comes. Now what do I mean by doctrine of partial merger? Listen carefully all of you. Partial merger means what? Suppose if there is an order of AO and there are various matters in the AO's order, expense A, expense B, expense C, expense D, and suppose one of the expense is what? Already you have appealed. So if you have appealed already one of the expense, or if already one of the item is in the revisionary proceeding, then that item cannot be subject to rectification. Can I go for rectification for the other items? Yes. The order of the AO merges partially with the order of the appellate authority and that much part cannot be rectified. Can I go for rectification for the matter which are not appealed? Yes. The matter which are not appealed and which are not gone in revision, you can definitely go for appeal in those cases. That is known as partial merger. So partial merger comes in 154 and 263, and in 264 we will see in some time the concept of complete merger comes. What comes? The concept of complete merger. So now let's go ahead with the next proceeding, and that is our second remedy, which is one of the most important remedy in practical life, that is appeal remedy. You will appeal. You are aggrieved with the order of the AO, or you are aggrieved with the intimation, you are aggrieved with the rectification order, you are aggrieved with different kind of orders and different kind of intimations. You have remedy of appeal. But now the first appellate authority is changed. There are 2 people in first appellate authority. Joint Commissioner appeal is also introduced and CIT appeal is also introduced. If an order is passed below the rank of Joint Commissioner, then you will go to Joint Commissioner. Okay. And if an order is passed by Joint Commissioner, if an assessment order or appeal or rectification order, any order is passed by Joint Commissioner, then you will go to CIT appeal. This is to segregate the work between Joint Commissioner appeal and CIT appeal. So this Joint Commissioner appeal is an absolutely new appellate authority introduced by the Finance Act 2023. Okay. So be very careful. If an order is passed below the authority of Joint Commissioner, then you will go to Joint Commissioner appeal. If an order is passed by the authority of Joint Commissioner, then you will go to CIT appeal. Okay. Similarly, whatever pending cases are there with CIT appeal will be transferred to the Joint Commissioner. Okay. And the Joint Commissioner appeal will continue the matter from where it was held, where it was left by the CIT appeal. Okay. And it will also give an opportunity of being heard to the assessee. So all the pending cases will also be transferred to what? Will also be transferred to the Joint Commissioner if the order is passed by the AO below the rank of Joint Commissioner. Okay. Similarly, there can be a transfer of back of the case also. Later on, if the department feels that there is too much pressure on the Joint Commissioner, so they can transfer back the case to CIT appeal also, and the CIT appeal will continue the matter from where the Joint Commissioner appeal has left the matter, and CIT appeal will also give opportunity
opportunity of being heard. Okay, I hope it is clear to all of you. So now let's talk about the Joint Commission appeal and CIT appeal. What is the assessee supposed to do? What is the procedure that the assessee is supposed to follow? The very first thing that the assessee is supposed to follow when the assessee files an appeal to CIT appeal or Joint Commission appeal, assessee has to keep the time limit in mind. Assessee has to appeal within 30 days from the date of receipt of notice of demand. So the time limit is very critical. It has to be appealed within 30 days from the date of receipt of notice of demand. Whenever you have received the notice of demand, you have to appeal within 30 days from the date of that. Okay, in which form? In form number 35, that is the relevant form in which you are going to file the appeal to the CIT appeal or Joint Commission appeal. Okay, now the procedure is not changed, only the authorities have increased. Instead of CIT appeal, now even Joint Commission appeal will be the relevant authority who will take care of your appeal. Okay, now can I get an extension beyond 30 days? Yes, you can get an extension beyond 30 days also if the CIT appeal or Joint Commission appeal is able to what? Is able to consider your case as a genuine case. Okay, now while filing the appeal, you also have to submit some grounds of appeal. What is your ground of appeal? Suppose you are not happy with the depreciation disallowances, so you can write the grounds of appeal. You need to file a statement of facts, etc., 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 and you also have to pre-deposit your tax, penalty, etc. But here the government gives you relaxation that even if you pre-deposit 20% of your tax, that is also fine. We will accept 20% of tax as your sufficient payment of tax for the purpose of filing an appeal. The rest of the amount you can pay after the appeal is completed. Okay, can I get a stay? Can I get a stay from appeal? Stay means what? Can I get an extension from payment of tax? Yes, the department can give you extension from payment of tax beyond 30 days also if there is a genuine case. Okay, that if there is a genuine case, they can give you 30 days beyond extension time limit also. Okay, now during the hearing, can there be adjournments? Yes, there can be adjournments because of multiple reasons. There can be adjournment because of me, there can be adjournment because of AO, there can be adjournment because of the CIT appeal, JC appeal also. It may happen. Okay, now once the appeal has started, there are two possibilities now over here. You can admit, you can give additional ground to the CIT appeal. You can also give additional evidence to the CIT appeal. Let me explain you the meaning of first of all both of them, and then I will tell you the conditions subject to which you can give additional grounds and additional appeals to the CIT appeal, okay, or to the JC appeal. Sir, what is additional ground? Additional grounds means a new ground on which you want to appeal. For example, originally when you fill form number 35, you have filled what? I am not happy with the depreciation disallowance. Now you are not happy with 37(1) also. So you can attach that also as an additional ground. But you can attach additional ground when you satisfy the CIT appeal or Joint Commission appeal that omission of that ground, omission of that 37(1) disallowance was not willful and unreasonable. Okay, I have not willfully omitted that. My omission is not unreasonable. My omission is reasonable omission. Okay, genuine omission it is. I have not deliberately omitted that. You have to prove it to the department, prove it to the CIT appeal or JC appeal. Only then they will allow you additional grounds to be appealed at the time of appeal. Okay. Second, what is additional evidence? Additional evidence means on the original grounds, you have not been able to give some relevant proof to the assessing officer earlier because assessing officer was not genuine, he was not accepting your proof. So now you are giving those proof to CIT appeal to defend your case. Okay. So additional evidence is different from additional ground. Additional ground is altogether a new matter, but additional evidence is a new evidence with respect to existing matter. The matter is same, but the evidence is new. Now, as per the income tax law, there is one rule, rule 46A, which allows you to give additional evidences under 4 circumstances. What is the circumstance number 1? Where AO has to admit the additional evidence. It means there was some CBDT circular which is in my favor and the AO did not consider. So now AO has to consider that. So AO did not consider that CBDT circular. So I told AO, don't consider. I will give it to CIT appeal as an additional evidence and he will accept it. Okay. Second one, where the AO has passed an order without giving sufficient opportunity to the assessee. So AO has passed an order without giving you sufficient opportunity to produce the evidence. Okay. AO has asked you example for the creditor's confirmation. So I asked the AO, give me 1 week's time, give me 10 days time, give me 15 days time for getting the confirmation. The AO said that I'm not going to give you more than 24 hours time, and if you do not produce the document within 24 hours, then I'm not going to I'm going to pass the order. So I said the assessing officer, you pass the order, I will go and tell the CIT appeal and JC appeal that the AO did not provide me sufficient opportunity to provide the evidence, and therefore I will give the additional evidence and I will claim that as an additional evidence. Third one, where the appellant was prevented by sufficient cause. You were prevented by sufficient cause of additional evidence called upon by AO. AO was calling for some document, but you were not able to give that document. Genuinely, you were not able to give that document. Maybe AO was asking for books of accounts and your books of accounts were already impounded by the excise department. That is the reason you were not able to give that books of accounts. So in that case, you can tell the AO. What you can tell the AO? So, okay, you pass the order. I will tell the CIT appeal, and CIT appeal will what? Will give me the benefit of doubt and will give me the opportunity to produce the additional evidence. And the fourth one is also similar. Again, you are prevented by sufficient cause before from the AO, from producing before AO any evidence to any grounds of appeal. What is the difference between this and the third point? In the third point, the AO was calling, and the fourth point, the AO has not called for. For example, the AO has passed an order under 144 without giving you an opportunity, without giving you a show cause notice. You can tell the AO, you pass the order, I will go to CIT appeal, I will appeal it, and I will take the advantage of what? Additional evidence in front of the CIT appeal. So these are the four cases in which you can give additional evidences, and all these chapters are rectification, appeal, revision. All these chapters are there in indirect tax also, GST also, customs also. So you have to be very thoroughly done over here. Nobody is going to teach you in so much detail in those subjects. You have to do all these things in income tax only in detail. Okay. Last but not least, the AO, the CIT appeal or JC appeal will pass an order now under section 250. What is the scope of their order? They can confirm the AO's order that AO is correct. They can cancel the AO order, NL, that AO is wrong. Or they can modify the AO order. They can increase the liability. They can reduce the liability. But they cannot remand back the case to AO for fresh assessment. That power is not there with CIT appeal or JC appeal. CIT appeal or JC appeal cannot remand back the case to what? To AO for fresh assessment. That is not possible with CIT appeal and JC appeal. Okay. Now, what is the time limit to pass an order? This is the recommendatory time limit, not mandatory time limit. Wherever possible, these words are used. It means it is recommendatory, it is not mandatory. Wherever possible, CIT appeal or JC appeal shall pass an order within 1 year from the end of the previous year in which the appeal is filed. So, whenever the appeal is filed, within 1 year from the end of that previous year, the AO, the CIT appeal or JC appeal will pass the order. Okay. So let's go ahead with the second appellate authority now. The second appellate authority under the income tax law is ITAT. ITAT. Now who will go to ITAT? Anybody who is agreed with the order of CIT appeal or any CIT order. Either CIT appeal order or any CIT order will go to ITAT. It is as simple as that. Okay. Now the order which is passed by CIT appeal under 154, rectification order, appeal order, penalty order. These are all penalty orders. You can go to what? You can go to ITAT. Even order which is passed by JC appeal, new authority, you can go to ITAT. Even order which is passed by CIT under 263, 272A. So all these orders are either orders of CIT or CIT appeal. Apart from that, an order which is passed by AO in pursuance of dispute resolution panel, because dispute resolution panel is a panel of 3 CIT. Even in that case, the order will be passed by, order will go to what? To the ITAT. Order in case of tonnage taxation will go to ITAT, and order in case of GAR, because that is also passed by CIT only, that will also go to what? ITAT. You are not supposed to remember all these things, obviously. Okay. Some of the orders are green over here. I agree, because those are inserted by Finance Act 2023. Earlier it was not mentioned. That is the reason you are finding them as green orders. Okay. But all these orders are generally passed by AO or are generally passed by CIT, or it is generally passed by the CIT appeal. You can go to ITAT. Okay. Now you can go to ITAT within how many days? You have to go within 60 days from the date of receiving the order. Okay. The day on which you receive the order, within 60 days you have to go to ITAT and fill form number 36. And the other party, that is the respondent has to file a memorandum of cross objection within 30 days. Okay. So the appellant will file appeal within 60 days and the respondent will file memorandum of cross objection within 30 days in form number 36A. I hope it is clear to all of you. Which form? Form number 36A. Now, can this time limit of 30 and 60 days be extended? Yes, it can be extended if there is a sufficient cause. Okay. If there is a genuine cause, it can be extended by the department. Now listen carefully, please, all of you, please, listen carefully, all of you. Very important point. An amendment which is made by Finance Act 2023, which says that a memorandum of cross objection can be filed in all the cases. Okay. Earlier, memorandum of cross objection was supposed to be filed in some cases, but now Finance Act 2023 has made an amendment that memorandum of cross objection should be filed in all cases. Every case you have to file memorandum of cross objection. Every appeal which is filed to ITAT should be filed along with memorandum of cross objection. Otherwise, appeal cannot go ahead. Okay. Now, can ITAT allow you additional ground just like CIT appeal? Yes, ITAT may allow you additional ground. ITAT may allow you additional evidence also. They may allow you both the things. Don't worry about it. Okay. Now, what is the scope of ITAT's order? ITAT may confirm the order of the previous authority. It may modify the order of previous authority, or it may NL, that is cancel the order of previous authority. And one more power is there with ITAT, which is not there with CIT appeal or JC appeal. That is, ITAT can remand back the case to the AO for fresh assessment. The ITAT can remand back the case to AO and tell the AO, that you have to do what? You have to do the fresh assessment under the income tax law. Okay. Now, what is the time limit to pass an ITAT order? Now, this is a very complicated issue. You have to be very careful with this when I'm explaining this point. By default, ITAT has to pass an order within 4 years from the end of the financial year in which the appeal is filed. In whichever year the appeal is filed, within 4 years from the end of the financial year of that year, the ITAT has to file an what? The ITAT has to pass an order. But if the ITAT has grant you stay, okay? Can ITAT grant you stay? Yes, ITAT can grant you stay in two circumstances. Either you pay 20% of the tax liability or you furnish similar amount of what? Similar amount of bank guarantee. Either you pay 20% tax or you furnish similar amount of bank guarantee, ITAT will give you what? ITAT will grant you stay. Now the law says that if ITAT grant you stay, then the order has to pass within 180 days. The order should be passed within 180 days and the stay will also vacate after 180 days. But if the mistake is of the ITAT, not of the assessee. If the mistake is of ITAT, then there can be an extension up to 365 days. So if the delay is attributable to the assessee, then extension will not be allowed. But if the delay is attributable to the ITAT, then the extension will be allowed up to 365 days. After 365 days, what will happen? After 365 days, whether the delay is attributable to the assessee or the delay is attributable to the ITAT, the stay will vacate. Whether the delay is attributable to the assessee, whether the delay is because of me or because of ITAT, the stay will vacate and I have to pay the tax. Okay. But the Supreme Court of India, in the case of Pepsi Food Limited, says that it is wrong to say this provision. If the after 365 days also, if the delay is attributable to the ITAT, then the extension of stay should further happen. Okay. So now the Supreme Court is coming in the protection of the assessee by saying that if the delay is attributed because of the ITAT was not able to function because of its other commitments, and because of that the delay is happening, then in that case the extension has to be given even beyond what? Beyond 365 days. I hope it is clear to all of you. Now there are some small issues which I would like to address over here. When the ITAT remand back the case to AO for fresh assessment, okay? Fresh assessment. Can the AO take up new matters? The answer is no. When the ITAT has remanded back the case to AO for fresh assessment, the AO will restrict to itself to only those matters which has been referred by the ITAT. Okay. Second issue. Can ITAT remand back the case for other years which are not under appeal? You have appealed for previous year 23-24. Can ITAT remand back the case for 21-22, 20-21, 19-20? The answer is no. The ITAT cannot do that. ITAT does not have the power to reopen the case of earlier years. Yeah, ITAT will only remand back the case for that year for which you have appealed. Okay. Third case. Can ITAT review its own order? Reviewing its own order means changing its original decision. That is not possible as per the Supreme Court judgment of Ernest Exports Limited, Bombay High Court. The the Bombay High Court has held that the ITAT cannot change its opinion. Whatever order ITAT has passed, after a few months, if they feel that they want to change the decision, they cannot change. But yes, if ITAT has made an apparent mistake, it can rectify its mistake under section 254 subsection 2. ITAT cannot rectify its mistake under 154. I have told you sometime before, because 154 only covers what? 154 only covers mistake apparent from record made by the income tax authority, and ITAT is not an income tax authority. Now, ITAT will make a rectification within how much time? That depends upon if ITAT is suo motu making a rectification, it will make a rectification within 6 months from the end of the month in which the order sought to be rectified was passed. And if the assessee is making an application, then it will rectify within 6 months from the end of the month in which the order sought to be rectified was passed. So where the application for assessee is made within 6 months, so if assessee also has to make an application within 6 months. So again I am saying, if the ITAT has to make a rectification, it will rectify within 6 months. Assessee should also make an application within 6 months, and if the assessee does not make an application within 6 months, then the ITAT will not rectify. The ITAT cannot rectify a belated application. Okay, you have to make an application within 6 months. Can a High Court rectify its own, review its own order? Yes, as per the Meghalaya Steels Limited Supreme Court judgment, High Court has the power to review its own order. High Court can bring the order, can call back the order as per some conditions, and it can change the order as per the Supreme Court judgment of Meghalaya Steels Limited. Sir, how many people hear my High Court judgment? High Court judgment is generally heard by 2 judges. One is known as judicial member, one is known as accountant member. But if the total income of the assessee is up to 50 lakhs, total income is up to how much? 50 lakhs. Then only a single member bench will hear your case. Okay, only a single member bench will hear your case if the total income is up to 50 lakhs. Okay, sir, if there are 2 members, there can be difference in opinion between judicial member and accountant member. Then what to do in that case? Then section 255 will come into picture. If there are 2 members and there is a difference in opinion between the judicial member and the accountant member, then the president of the ITAT has a president. The president of the ITAT will call all the judges of that ITAT, and all the judges of that ITAT will decide the decision, will make the decision based on the majority of the members' opinion, including those 2 judges who are hearing the case. Okay, I hope it is clear to all of you. Next one, can ITAT allow you to ITAT allow you to admit additional grounds? The answer is yes. The ITAT can allow you to admit additional grounds as per the Supreme Court judgment of National Thermal Power Limited versus CIT. This power is not with the AO as per the Goetz India Limited case law, as I have told you sometime before in this revision video itself, that ITAT can allow additional grounds also. Appellate authority have the powers to admit additional ground, but the AO does not have the power to admit additional grounds without filing a revised return. AO will tell you have to file what? A revised return. Next issue, the last issue over here, Srimati Rita Sabapati versus DIC 2019 Madras High Court. Now what has happened in this case? Listen carefully. Issue number 7. There was one assessee who was not able to present himself on time on a particular date in ITAT. Because of some reason, he was not present in the ITAT. So because the assessee was not present on time on a particular date, he did not appear on the appointed date at hearing. Can ITAT pass an order against assessee? The Supreme Court held that, in fact, the Madras High Court held that the ITAT cannot pass such best judgment order, such ex parte order without listening to the other party. Just because the other party is not present, it does not mean that the other party is wrong. You have to hear him and then give the judgment. Without hearing, you cannot give the judgment against any particular person. I hope it is clear to all of you. Now, conclusion. ITAT is the last fact-finding authority. If you want to go beyond ITAT, that if you want to go to High Court and Supreme Court and appeal, then there has to be a substantial question of law in your case. There has to be a substantial question of law. Substantial question of law means it has to be a matter of interpretation of law. It has to be a matter for which there is no clarity. There is no authentic previous judgment. And your matter will be now decided by the Code of Civil Procedure 1908. Okay. Now all these proceedings like CIT appeal, JC appeal, ITAT, all of them are going to be what? Faceless. Sir, what is the time limit to appeal High Court? The time limit to appeal High Court is 120 days from the date of receipt of order, and the time limit to appeal to Supreme Court is 90 days from the date of receipt of order. Now, certain special provisions with respect to reduction of time, reduction of burden on the court. First one is 158A. Special provision for avoidance of repetitive appeals. Sir, what is this provision all about? Let me explain you what this provision is all about. Suppose last year I have already appealed one particular item and which is already pending in High Court. It means there is already a question of law which is pending in the last year. Okay. Now in the current year, again same thing is disallowed by the assessing officer. Should I again appeal the same matter? Because already last year's matter is pending, similar matter is pending. Should I appeal the same matter in the High Court? Should I appeal the same matter again to CIT appeal, then ITAT, then High Court? The same matter will duplicate. Okay. It will be a repetitive appeal. It will be appeal of the same matter again and again. So in that case, the government says that you have to fill form number 8 to the AO, CIT appeal, and DC appeal, or JC appeal, or ITAT. Okay, you have to fill form number 8 to these authorities, and if these authorities accept, then they will pass an order as per the current judgment, and whenever the final order will come for the last year, they will apply in the current year also. Okay. Now, when you make an application in form number 8, the department may admit, they may reject. Why, sir? Because in your eyes, it is a similar matter. In the eyes of the officer, it may not be similar matter. So in the eyes of the officer, if it is not a similar matter, he may not accept the matter. He may just reject the matter and go ahead. So just listen carefully what I am saying. 158A talks about repetitive appeals we want to avoid. We want to avoid the repetitive appeals. You have already appealed in the last year a question of law. Now again in the current year, the same matter is again disallowed by the officer. You don't want to again appeal that to High Court or Supreme Court or to go to higher authority. You can go for form number 8, give it to the assessing officer and say that I am not appealing because my matter is similar. AO may accept, AO may not accept. Okay. Now the next point, 158A, I will explain you that with the help of an example which is over here. Otherwise you will not understand. Just wait. Now, pay attention over here on the numbering also. 158AB. Suppose there was an assessee in whose case in previous year 2021, ITAT has passed an order in his favor, and that is a question of law, that depreciation reduction is allowed to you. Okay, so listen carefully. Suppose in my case, in 2021, ITAT has passed an order and in my favor, and I won the case at ITAT. Okay, now the department filed an appeal in High Court and the appeal is pending in the High Court. Okay. So 2021 appeal is pending in High Court, and who has filed an appeal? The department has filed an appeal in High Court, and the matter is pending in High Court or Supreme Court. Okay. Now coming to the current year. Current year, similar question of law came in front of us. Okay. Again, the CIT appeal has passed an order in my favor. Okay. Question of law is in my favor. Now, again, the department has only one option to file an appeal, but the department has made one collegium for such case. What the department is feeling? For 2021, already similar matter is pending. Now in the current year also, what sense does it make to again appeal the same matter? So a collegium is made by the department which is comprising of 2 or more commissioner or chief commissioner. They will look into such matters where a similar pending matter is already appealed by the department. They will tell the CIT that a similar matter of last year is already pending. That's the reason we are not appealing to in 23-24. You tell the AO, to inform the ITAT and High Court within 120 days that we are not appealing as of now. We will appeal after the judgment of this year came. After the judgment of this year came, at that time we will appeal. So it is just like avoidance of repetitive appeal only, whereby the initiative is taken by the department. There the initiative was taken by whom? The SSC. Here the initiative is taken by whom? The department. It is as simple as that. Apart from, there is no other difference between the two provisions. Okay. Now coming to the next provision. Again, the next provision is to reduce the burden on the appellate authority. 268A. What is this 268A, sir? Let me tell you. Special provision for appeal by department. Now, there is a monetary limit which is fixed by the department that if the monetary limit is below that, if the stake is below that, then the department may not appeal. Okay. What is that stake? If the tax effect is greater than 50 lakhs, then the department will appeal to ITAT. What if the tax effect is less than 50 lakhs? Then department may appeal, may not appeal. Okay. Second, if the tax effect is greater than 1 crore, then the department may appeal to High Court. And if the tax effect is greater than 2 crore, then the department may appeal to Supreme Court. Okay. Now listen carefully. What is a tax effect, sir? What do I mean by the term tax effect? Tax effect means whatever is the current tax minus whatever is the estimated tax if the department wins. Suppose today, before appealing, the tax is coming to 1 crore. And department feels that if we appeal, then we will get the tax of 1.7 crore. Then the difference between 1.7 crore and 1 crore will be called as 70 lakhs will be called as tax effect. So now listen carefully. If the tax effect is greater than 50 lakhs, if the tax effect is greater than 50 lakhs, then department will appeal to ITAT. If it is greater than 1 crore, then department will appeal to High Court. If it is greater than 2 crore, then department will appeal towards Supreme Court. Sir, what if it is less than 50 lakhs, less than 1 crore, less than 2 crore? Department cannot appeal. Department may appeal. It is not mandatory that department will only appeal only if it exceeds 50 lakhs, 1 crore, 2 crore. These are recommendatory time limit for department and it is for internal circulation of the department. Okay. This is the first thing that you have to be. Suppose in your case, the tax effect is 30 lakhs and department is appealing to ITAT. Don't tell me, sir, you have told me the department will file only after 50 lakhs. No, I never said that. I said that this is the limit which is fixed internally by the department. Even if it is lower than that, department wants to file, they can file it. It is their right. It is their duty that they can file it even below the limit which is mentioned. But if it crosses this limit, they will definitely file. If it is below this limit, they may file, they may not file. I hope it is clear to all of you. Now, if in a particular year, if department did not file an appeal, that does not preclude the department to file. That department will not file the appeal for your friend also. They might file the appeal for your friend. In your case, if they have not filed, it does not mean in your friend's case also they will not file. It is not like that. In your case, if they are not filed, it does not mean in your case they will not file in the next year also. They might file a case on similar matter in the next year. So it is only year specific, it is only person specific. It cannot be extended to other persons, it cannot be extended to other years also. I hope it is clear. Further, if the department is not appealing, it means they don't have time to appeal. It does not mean they have agreed to your deduction or they have agreed to your exempt income. It is not like that. It is not that you will make that as a binding precedent for future years that no, last year you have not appealed. It means you have agreed that this expense is allowed. No. We are not saying that. We are not at all saying that. Okay. I hope it is clear to all of you. Here we complete all the appeal relating proceedings. Now we will talk some small procedures with respect to collection and recovery and then we'll move ahead with our last provision for the day and that is revision by the Commissioner of Income Tax. Collection and recovery. Notice of demand has come under section 156. Once a notice of demand has come to you, you have received the notice of demand, you have to pay the demand within 30 days. Within how many days you have to pay the demand? Within 30 days. Now, can I get an extension? Yes. If you make an application to the SSC may extend you or they can also give you an installment facility but with interest, not without interest. They will give you installment facility only with interest, not without interest. Okay. Can the department reduce your time period also beyond 30 days? Yes. If the department AO has reason to believe that giving 30 days is detrimental to the SSC, detrimental to the interest of the revenue, giving 30 days to this person is very dangerous for the department. He will run away somewhere. In that case, giving 30 days is detrimental. Department can also reduce the number of days below 30 days. Okay. Now, after 30 days, if you don't make the payment, you will be called as assassin default and there will be 4 consequences against you. First consequence, the department will impose interest under section 220, very important interest. At how much percentage? As 1% per month or part thereof. Is there any way in which I can get waiver of this interest? Yes. If you go and explain Commissioner of Income Tax and Chief Commissioner of Income Tax that there is undue hardship, there will be an undue hardship on you if interest is charged. Or if the delay will be beyond the control, delay is beyond my control. If you can explain the SSC that delay was, if you can explain the CIT that delay was beyond the control, and if you can explain the CIT that you are a very cooperative SSC, HCC, undue hardship, delay was beyond the control,
and you have given necessary cooperation, chief CIT or CIT may waive your interest, and they will pass an order for waiver of interest within 12 months from the end of the month in which the application is received. Okay. What is the second consequence? The department may impose, if you do not pay the tax within 30 days and if you become assessee in default, the second consequence, there may be a penalty which is equivalent to tax in arrears under section 221. Then under section 222 to section 225, there might be a recovery mechanism which can be imposed against you. The tax recovery officer will prepare a certificate of action. The tax recovery officer will prepare what? A certificate of action, and will do three things with you. Attach your movable and immovable property. Will do what? Attach your movable and immovable property. Will appoint a person for management of property, and will also auction your property. They can do either of the three things. Further, in section 226, they can further impose recovery mechanism against you. Again, tax recovery officer will make certificate of action, and now further 4 recovery mechanism will be imposed against you. What is the first thing? Section 276 subsection 2. If you are employed somewhere, then the government will send notice to your employer that the salary of the assessee should be credited to the government of India from next month onwards. Okay. And if you have some money to be received from your debtors, then the garnishee orders will be issued to the debtors. Garnishee order will be issued to the debtors, and the government will inform the debtors that you have to give the money to the income tax department rather than to the assessee. And if you pay to the assessee, then the debtors will become what? The assessee in default, and the government will take action against the debtors. Okay. The government will make an application and a request to the court to release the property in favor of the income tax department if the property is in the court custody, or if the government wants, the government can make a distrained sale of your property. Distrained sale means what? At the very less price they can sell your property and recover the money, and this is what the dangerous provision of recovery is all about. One last thing in this revision video for this chapter for today as of now is revision by CIT. CIT can revise AO's order under 2 sections. One is under 263, one is under 264. Under 263, CIT will revise the order if the order is against department. And under 264, CIT will revise the order if the order is against assessee. Okay. So under 263, CIT, principal CIT, chief CIT, and CIT will call for the record of the AO's order, and if they find that the order of the AO, these wordings have to be there in the examination. If the order of the AO is erroneous and it is prejudicial to the interest of revenue, they may, after giving an opportunity of being heard to the assessee and to the AO, they will pass an order against the assessee. So what the CIT will do? CIT will call for the order, call for the records and examine the records, and if the CIT finds that the order passed by the AO, and even TPO, transfer pricing order, can also be revised over here, is erroneous and prejudicial to the interest of revenue, then he will give an opportunity of being heard and he will pass the order. Okay. Now what is the scope of the order over here? CIT can enhance your order, AO's order. CIT can also modify your order, and CIT can also cancel and direct fresh assessment just like ITAD. This power was not there with what? Was not there with CIT appeal. Now when can CIT pass a revisionary order over here? When the order passed by the AO is what? Erroneous and prejudicial to the interest of revenue. So what do I mean by the phrase erroneous and prejudicial to the interest of revenue? It means then order passed by the AO is without making sufficient inquiries. AO has not made any inquiry and passed the order, or AO has given a relief without making inquiry, or AO has not considered what CBDT circulars and orders and direction, and AO has not considered High Court, Supreme Court judgments. Therefore, it can be said that what? The order passed by the AO is what? Erroneous and prejudicial to the interest of revenue. Now, CIT can only revise AO's order. CIT cannot revise intimation or deemed intimation under the income tax law. Intimation and deemed intimation cannot be revised. I have told you earlier also, it can only be appealed and it can only be rectified under 154. If you are not happy with CIT's order, you can make an appeal to ITAD. To ITAD, you can make an appeal. Now, will the assessee be given an opportunity of being heard? Yes. If the assessee is given an opportunity of being heard and assessee proves his point correct, then the proceeding under 263 will be dropped. Is there any need to give a show cause notice to the assessee? No. Show cause notice is not required. Only an opportunity of being heard is required to be given to the assessee. No separate show cause notice is required to be given to the assessee. Doctrine of partial merger is applicable here. It means if any part of AO's order is already appealed, that part cannot be revised under 263. Can other part be revised? The other part can be revised under 263. That part cannot be revised under 263. I hope it is clear to all of you. So what is the time limit to pass the order? The time limit to pass the order by CIT under 263 is 2 years from the end of the financial year in which the order sought to be rectified was passed. So if the order is passed in 23-24, then 2 years from the end of this year will come to 31st March 2026. But there is no time limit. If the CIT wants to give a direction to any
High Court and Supreme Court order. Suppose if the High Court has given an order or if the Supreme Court has given a judgment that this expenditure is disallowed, then the CIT can open even 5-year-old matter, 6-year-old matter and revise that matter. In that case, there is no time limit. Okay. Now next one, last one over here in section 263, that is a Supreme Court judgment of CIT versus ICICI Bank Limited, Bombay High Court and Elegant Trend Finance Supreme Court. What is this case? Let me explain you with the help of example. There was an AO who has passed an order. After passing the order under 143(3), subsection 3, he has passed the order. On some matters, he has made some additions. On some matter, he has allowed. Now, after few years, 147 assessment was done. On some matter, he was made some allowed some items. On some matter, he has disallowed some items. Now, after few years, the CIT wants to revise the original order. He wants to revise the original order. So now the question is, if he wants to revise the original order, from where the time limit of 2 years will count? The time limit of 2 years will be counted also from the original order, not from section 147 order. Okay, this is what this case law has to say. The case law says that whichever order you want to revise, the time limit of 2 years will be counted from that original order, and the time limit from original order was unfortunately expired, and therefore CIT was not able to revise that order. Now section 264 is opposite of section 263. Your AO has passed an order which is prejudicial to assessee, which is against assessee. So here assessee can also make an application, CIT can also make a suo moto revision. CIT can suo moto revision and assessee can also make application. But there is one important condition over here. Any order which has already gone in section 263, 264 cannot apply to that. It means once you have done 263 on any matter, if there are 10 matters in your order and even if one matter has gone in 263, the remaining 9 matters also cannot come in 264. This is only called as doctrine of complete merger. It means one item has gone into 263, the remaining 9 items also cannot come into 264. This concept is only called as what? Doctrine of complete merger. I hope it is clear to all of you. Okay. Now. The AO, the CIT will revise the order of AO. Similar point, the CIT cannot revise intimation under 264 and deemed intimation under 264. The CIT has the power over here to cancel and direct fresh assessment, but CIT appeal does not have this power. All these things are same as I've told you earlier. Sir, what is the time limit to make a revision under 264? Now listen, if the CIT on its own motion revise the order, it shall not revise 1 year after the date of passing. So on whichever date the order was passed by the AO, 1 year after the date, it cannot be revised. Okay. Now, what is the time limit for application for revision by the assessee? If the assessee makes an application, what was that first time limit? If CIT suo moto makes a revision, it will make 1 year from the date of passing the order. What is the time limit for making an application by the assessee? Application can be made within 1 year from the date of communication of the order. Communication means from the date of receipt of the order. Okay. And if you give a genuine reason, it can be extended beyond 1 year also. Okay. Now, what is the time limit to pass an order? What is the time limit to pass an order after the assessee made an application? So it will be passed within 1 year from the end of the financial year in which the application is made by the assessee. So there are 3 time limits. All of them are 1 year, 1 year, 1 year, but all the 1 years are different. Let me tell you how. First 1 year is 1 year from the date of passing. Second 1 year is 1 year from the date of communication. And third 1 year is 1 year from the end of the financial year in which the application was made by the assessee. Okay. So be very careful. Okay. Now, under what circumstances, this is very important part of this particular section. Under what circumstances revision under 264 is not possible? Revision under 264 is not possible under certain circumstances. First, if you file an appeal on any matter, even on single matter, there are 10 items in AO's order. Even if one matter is appealed by the assessee, then doctrine of complete merger will apply. You cannot go for revision for the remaining 9 items also. Okay. Secondly, suppose today I receive the order. Today is 1st April. Okay. Now, how much time I have to make an appeal? I have time to make an appeal 30 days. Okay. So in this 30 days, I cannot go for revision. In this 30 days, I cannot go for revision. I can only go for revision after 30 days time limit is expired. Now, but I want to go for a revision under this 30 days only. If you want to go for revision under this 30 days only, you can go for revision under 30 days. That is, you can go for revision before expiry of time limit for appeal, but you have to file a waiver for filing an appeal. You have to give an undertaking that I waive the right to appeal. Only then you can go before the expiry of time limit of appeal. Now, once the time limit of appeal is expired, then you are free. You can go at any time after that. Now, once the order is passed under 264, one of the biggest drawback of this section is it is a non-appealable order under the income tax law. You cannot appeal. Income tax law does not give you any remedy under the income tax law to appeal. Therefore, you only have a constitutional remedy. Then you can go to High Court and you can file a writ petition, or you can go to Supreme Court. You can file a special leave petition, or you can go for what? If there is a apparent mistake, then you you can go for section 154 and rectify it. Then I have put some similarities and differences between both the sections. The similarities are both are revised by commissioner, principal, chief commissioner, etc. Both are order of AO. In both sections, suo motu rectification and revision can be done. In both the sections, it can be set aside and a fresh direction can be given to AO. Both can rectify under 154. Now, what are the differences between both of them? 263 is prejudicial to revenue, 264 is prejudicial to assessee. If you are agreed with 263 order, you can appeal to ITAT, but 264 you cannot appeal, but you can go for writ petition. 263 partial merger, you can go for other matter, whatever is appeal. Apart from that, rest of the matters can be rectified, can be revised over here. In 264, even if a single matter is appeal, entire order is non-appealable. Even if a single matter is appeal, no item. Even if a single matter has gone for 263, the entire order is non-revisionable. It cannot be revised. Okay, revision under 263 is possible after 264. But revision under 264 is not possible after 263. Then the time limit, which I have already told you. And last but not least, all this CIT appeal, ITAT, revision, etc. The government is going to make all of them as what? As faceless from the last year onwards, I guess, since last 2021, 22 or 22, 23, all of them have become faceless. So this is what this revision is all about. I have made a promise to all of you. Okay, to all my dearest South Indian students, I have made a promise to you. What is the promise? That I will record English videos for all of you. I made that promise to you. I will fulfill that. Don't worry. Yes, my promise might be delayed because of some reasons. Because Ramzan is going on, my fast is going on. Because of that, I am not able to record so many lectures in a day because I cannot drink water. This lecture also 2.5 hour lecture I have recorded at a stretch without taking a break, without drinking a single drop of water. So I will be doing it for you all. Don't worry. It is my duty. If I have told you, if I have promised you that I'll be making all the revision videos for you, I will be making it for you. Don't worry about it. Okay. Be rest assured with that. Take care all of you. Bye all of you.